GETCRACK. Wake up, motherfucker.
133,000, which is a significantly higher number than was anticipated. The forecast was for 111,000. The September number revised up to 159 from 143. Remember, we had a major increase in jobs in the month of August and September, where we saw jobs rise by 223,000 in private payrolls. That's the comparable to the ADP. So this is a number that does suggest some real strength in the labor market that maybe hasn't been expected.
First question, what happened to the hurricane noise that everyone's pricing in for Friday?
Well, here's the thing about the hurricanes that we don't know is the timing effect, because the hurricanes hit on sort of either end of the reference week, which is the week that includes the 12th of the month. And so if you worked at all, if you worked an hour, then you would be counted as employed. And so it is very possible that the people from Helene got back to work, a number of them, and the people from Milton hadn't yet lost their jobs in the meantime. So that's something we're going to have to keep an eye on Friday when we get the numbers. And usually the Bureau of Labor Statistics puts out a little note that says how much they think the hurricanes impacted the jobs report.
All right, let's get to a mad dash with Jim. We got about 7 minutes before we get to an opening bell. We briefly mentioned shares of D.R. Horton. They are going to be down after earnings.
Yes, and there are a lot of tails to this one because D.R. Horton's a very good operator. These are the homes 400,000 and under. A lot of people view them as first-time buyers. The first-time buyers have paused. I think they've paused because first rates went down, and now they're back up. I don't think Horton disagreed with me. Horton, you're always trying to find a silver lining, and then sometimes you get our numbers were below expectations. So you can't suddenly foment something that's positive when management itself says that things are light. David, it's frankly one of those situations where if you decide to extrapolate it to Toll Brothers, which is $1 million, I think that's a mistake. I think those, remember, like 35% of those people pay cash at Toll.
Right.
But, David, this is going to be cast a poll on a lot of stocks. And the reason is because there's so many people who are betting when you have rate cuts that the buyers would come in, start buying homes, refurbish homes. We're not getting that. My Chapel Trust owns Home Depot. I shuddered when I saw this because I said, wow, they're not giving this company any grace period at all for the rate cuts to kick in. This did feel like a November cut.
Can we get let's put it in perspective here, get out of 24 hours. I just want to see what the stock's been doing.
Oh, no, because it's been a great stock.
Yeah, it has been.
You did that.
Yeah, so let's look at that. Okay, give you a better sense.
I think people
here.
have to know this is an excellent operator. So when you see them miss, what that says is it's the economy, it's not them.
Right.
And the economy is pausing. The people who were trying to buy that first-time home, David, they're saying, you know what? That mortgage just got too high.
Net sales in the fourth quarter increased slightly from the prior year, 19,035 homes.
Right.
I'm just reading from the earnings release. Sales pace in line with normal seasonality from the third to fourth quarter, but was below their expectations.
Yes, affordability is an issue. C homes closed 90 to 92,000, was supposed to be 94.5. There is some inventory in the system. I just don't want to see this, which is a premier company, miss this.
Yeah,
badly.
although, I mean, this during a period where rates rose dramatically.
You know, today's going to be a bad day. And I want people to put in, I'm so going to do that. Put this in perspective. This thing has not missed in ages and ages and ages. Like someone's going to say Royal Caribbean didn't do well today. That's different. They did well. But this is a situation where the rate cuts didn't work.
Right.
And that's what you have to be thinking about right now. Did the rate cuts not generate good growth? And that's what I'm worried about.
We'll be right back.
What numbers jumped out at you? Is it what Caroline Hyde was telling us about, which is the CapEx spending for the quarter, seen topping $12 billion and actually reported at $13 billion?
Yeah, I would say CapEx is relatively in line with our expectation. It's been fairly flat for most of 24. We'll see what the commentary is on the call in terms of 2025 CapEx spend. I think that's the big question. That'll a lot of investors are focused on that for not just for the hyperscalers, but also for the semiconductor companies, obviously. I think the big number that stood out to me was the 35% cloud growth. We were looking for about 29% growth, similar to last quarter. So that was very strong in terms of the cloud growth. We'll look to the call to see what they say in terms of the drivers for that strong growth, whether that was AI on the cloud side. That'll be a big focus. Obviously, Google's lagged AWS and Azure on the cloud side, so that'll be a big focus. And then they had good strength on both YouTube as well as core search growth. That was both slightly above our expectation, so continued momentum there. And we'll look to see on the call as well in terms of momentum, in terms of AI with Gemini, et cetera.
I am curious on the YouTube front, really on the ad front writ large. The number is slightly above street estimates here. How much growth is left in that? I saw they were touting in the release the idea that they've reached 50 billion in ad sales on that platform, at least on a 4 quarter basis.
Yeah, so we're going to have to look for the growth rates there. Just on the ad side alone, they grew about 12%. We think that growth is higher if you include the subscriptions. But we would still look for kind of double-digit growth on the YouTube side, probably a little bit above that if you include subscriptions as well. So we think it can probably grow mid-teens, including subscriptions, but not a number they disclose very often.
What are you thinking in terms of margins? Is there going to be margin degradation? We were talking earlier with Mandeep Singh of Bloomberg, and he was saying that that's going to be the biggest concern here, that even as Alphabet is able to continue to grow its revenues, the margin is going to be at question.
Yeah, we think it's a question, especially on the cloud side for a lot of the hyperscalers, in terms of the CapEx spend. That is going to obviously hit the depreciation line increasingly throughout the next several quarters here. So not just for Google, but we think that'll be a concern, and maybe why we do see a little bit of a pause in some of the CapEx spending towards the end of 25 and going into 26 as the hyperscalers wait to see more revenue adoption on some of these AI initiatives.
So when we talk about the spend on the AI initiatives, you're comfortable right now with the CapEx spend. And I mean, comfortable kind of overlaid with the idea of when we actually see a return on that investment.
Correct. So even if you don't see all the AI revenues come in, let's say in 2025, I think a lot of the hyperscalers just said we'll be able to use that capacity, whether it's 2025, 26. At some point, we do expect to slow down that CapEx spend, but they fully expect to be able to use a lot of this CapEx over the next couple of years.
Aaron, what do you want to hear from the company that they probably won't address, but if they even get close to it, what would you want to know about?
Yeah, I mean, definitely on the antitrust side, I think that's been the biggest overhang on the shares over the last few months here. We do think probably an investor's view that the ad tech assets are most at risk without potentially having to get spun out. In our view, there's less risk in terms of a core breakup of Google. We don't think anything's been really said today on the call around that. And we don't think anything's going to be decided over the next couple of years as well. And that'll be in the appeals process for a while. And then on the other hand, I would say AI is going to be another big topic just in terms of traction, both on the enterprise side, whether that was a driver of cloud growth, as well as the consumer side, whether consumers are starting to use Gemini more for everyday searches.
Investors, how high is the bar here for AMD, given that this is a slight miss on the outlook, yet the stock is being punished right now?
Yeah, no, there's certainly a high bar for AMD. Having said that, I think a lot of the devil is going to be in the details here. So if that revenue miss is tied to console gaming, for instance, and that's how they explain it, I think they'll get a pass, and that they'll do relatively well. If they're not able to bump up the bar for their AI revenues, that would be a different story, and I think people will take that more harshly when they give commentary.
What should we be looking to? I mean, is this about kind of that PC cycle? Is there a longer-term AI story? I mean, what's kind of the big driver here that we could kind of focus on to measure their progress?
Yeah, I think it's really all about AI in the data center. Yeah. So you've got such a huge market there now, particularly given what NVIDIA is reporting, that if they're able to show more traction there, it creates a whole lot of upside to revenue going forward. If that doesn't show up, that would be disappointing.
So AMD no longer owns its own plants. It basically outsources production to TSMC. How much does that really put it in a position where it doesn't have a lot of control over its production capabilities? I mean, it's really at the mercy of TSMC's capabilities.
I mean, you could say that, but you would have to say the same thing about NVIDIA, Broadcom, Marvell. At this point, TSM is the leader in advanced semiconductor production, and if you go in the other direction, so you own your own stuff, potentially your Intel, where that actually becomes something of an albatross because you're not keeping up with TSM.
Is there a sense when we start to talk about the catch-up and the idea that NVIDIA has sort of dominated this space, both in terms of sales, but also just the headspace of a lot of investors here, Matt? Is there, I guess, a way that maybe we can see a little bit more articulation out of AMD to investors specifically about why we should take them more seriously as not just a number two, but as a closer number two, not the distant number two they are right now?
Yeah, so I mean, the thing to think about with AMD being distant from NVIDIA, so they have an order of magnitude lower sales, or more than order of magnitude lower sales, is that the next closest competitor to them is an order of magnitude beneath them. And I think AMD has a compelling argument in that with NVIDIA, they are putting more and more of their content into servers, so there's less and less differentiation for their customers. AMD is more open, and so that's attractive. And I think they can make an argument that their solutions are attractive to that large customer base, and they can compete.
This Halloween, it's time to turn up the heat and bring those spooky vibes. The John Galt YouTube channel is hosting the ultimate sexy Halloween costume contest, and you could win over $300 in cash. That's right, first place takes home the biggest prize. But don't worry, second and third place will still score big. It's easy to enter. Dress to impress, flaunt your most creative, sexy, or daring costume, and show up to the live stream during the evening of October 31st, which is a Thursday. Come on over on Halloween and flaunt your very best and enter your chance to win the grand prize. Let your imagination run wild. You can be a witch, a vampire, a ghost, a nurse, a cheerleader, anything goes. The more unique and bold, the better. Winners will be crowned based on creativity, style, and those spooky Halloween vibes. The John Galt community will decide who takes home the glory. So what are you waiting for? Get your costumes ready now and come on over to win that prize on the John Galt YouTube channel. Hit that subscribe button, follow the contest rules, and you could be walking away with cash and bragging rights. This Halloween is not just about tricks and treats, it's about winning big on the YouTube channel, the Urban Landlord. It's the only place doing this. Let's have some fun, let's have some laughs, and let's have a spooky good old time. See you there.
What's up? What's up? All right, let's see what we got here. Crack. Did you see where Robinhood has an option to bet on the election? Oh, that's interesting. The Poly Market. I was talking about the Poly Market crypto betting website where you can bet on everything over there. So let me put up the link. So I didn't know Robinhood is allowed to do that, but all right. That seems kind of illegal, but cool, whatever. Polymarket.com. You want to bet using crypto? You got some Ethereum? You can go over there and bet. Yeah, so if Robinhood's allowing this, that's kind of a problem because Polymarket isn't allowed to do that kind of betting in the U.S. So if they can do that, that's something. Yeah, Robinhood will report earnings after the close of date, incidentally. So I'll see how that going. But I mean, if you were betting on Trump winning or losing, you should have been in DJT. DJT was the hot stock for most of the month. So let me pull it up. I'm looking at GameStop right now too. So DJT being a meme stock, you might see something happen with GameStop. So right here, we bounced off the bottom of the last support set by March 2023 and rallied all the way up to the major support given at $50, and we're crashing right now. So whether or not that's because of polls changing or whatever, I'm just assuming it's just because of the chart. So yeah, somebody mentioned to me in real life, like they were asking me, "Well, should I buy this?" I'm like, well, it's just gambling at this point, because here was gambling. You're just buying because it was at the bottom, and all of a sudden it starts turning around because polls were shifting towards Trump compared to Kamala. And once you broke this level here at 22, set in June of 2022, and then it was tested several times, like November 2022, and again here in July 2023, and then again in April 2024. Once that broke, it was a clear shot up to the next level in $33 to $37. This was a midpoint, kind of a midpoint of this range, and we got all the way to the top finally. So I mean, hey, it's a short squeeze. It because of polls, I have no clue. Right, this is just one of these stocks where, and I'm going to go over several other stocks that have similar looking shapes. I know a lot of you guys are gamblers. I'm not that type, but you know, you can find these stocks. This is quite rare, right? You have a nice sharp V shape, and there's another one, WGS, which reported earnings. This is a pharmaceutical genetic testing type biotech stock where it IPO'd. Well, maybe it was a SPAC. I think maybe it was a SPAC during the 2021 period. So WGS is GeneDx. I'll have a video on this. And look at this. This is just a straight down, straight up. Like, well, you know, I can't tell you much because charts like these are quite rare. Quite rare. Like, you just have a straight, clean downward trend, and then you have a clean upward trend. Like, come on, bro. This, yeah, like if you were on this in this sucker, it was like 6,000% right from the bottom. Hey, you know, I was in one of these, like Carvana, which reports earnings today. Carvana. So Carvana, it was one of my favorite little stocks. Like if you were in this thing instead of Bitcoin, boom, you would have got like, and who knows if you got options on this? Well, this is 5,000% from the bottom in December of 2022. I got out early. I got in $4 to $5. I got out when it jumped up above 13 to 15 to 17. It got up here. I said, "Oh, that's good enough profit." Well, guess what? If I just re-entered here at this support set in November 2022 and took a chance on it because it made a double bottom when it hit it again from March and then May, and then I would have just ran with it. Just shit. Look at that. It went all the way back up to $200 a share. Like, come on, man. So this is what I'm trying to do, because I know a lot of you guys are looking for stocks like these where there's good chances of V shapes. I think that's very difficult, but you know, we have to detect at least bottoms being made. That's the first step. So that's why I went through the scanning thing the last couple presentations, trying to do the scanner stuff, because we have to detect bottoms like this, because this is actual clear bottom. Of course, like if we did WGS, there's no clear bottom really. It's really a V. This is really hard. But if you go deep enough, like maybe if we went to the hourly chart, we might have detected something creeping up in the lower time frames. Not sure. You know, it's really hard to say because there was a lot of volume here. So if you went to the lower time frames, you probably could have made a guess and an assumption that something was building when it was making this move from 1.5 to 3. So yeah, you have to detect these type of things. And yes, okay. Momo's looking at Robinhood. Its forecast contract. Yeah, that's illegal. The CFTC banned Poly Market from doing that stuff because they said, "Nah, man, you can't make technically futures contracts because that's what it is. You're betting on the future. You're doing futures illegally outside the, you know, legalized casino, which is the commodities futures, index futures, all that stuff. Like if you're making your own futures market like that, nah, you got to clear it with the government. Government needs its little you know, hands greased. You can't be a gangster out there without paying the Uncle Sam its due, right, for making your own casino. Okay, anyhow, let's see, what am I going to discuss today? So AMD had its earnings. You saw that video. Also, we had DR Horton earnings yesterday, so that was interesting. So let me go over that first. So DH Horton, so that's the home builder. So first-time home builders, home buyers will tend to gravitate towards buying a new development. So DH Horton is a real leading indicator of that. So you saw it crash yesterday, but you see this nice pop. I like this. I like stocks that look like this. So when I talk about home builders, it was way back in the summer. It was during the time when Nvidia was making new highs, right? Nvidia started crashing around probably July 10th. And I was talking about it in the Thorpe stream, one of those late night Thorpe streams. Let's see. Clara says, and they're waiting till January 8th to pay out for some reason. You think there's gonna be another some like, let's say Trump wins and then like the left does a January 6th moment. Okay, I don't know. Whatever. Interesting. Anyway, so okay, let's get back to business here. So around here I started buying, and it was because I drew this channel. So this is an uptrend. Okay, you got this nice uptrend. And here we have an undercut. You got an undercut. You kind of went below it because you kind of went below it because I drew this parallel channel based on these two tops here. Okay, you can draw your own channel in TradingView like this. So let's say you drew a line like here, and then you pulled it down to here. So then it basically suggested that this area would be a time to buy. So that's one area. So you could have bought home builders up here. And this was a time when Nvidia was making new highs. Tech was very good. But, I was feeling like it's a good time to get out because if Nvidia is making a new high, it's going to rotate to another sector. And home builders was that place to hide out in during the late summer. So if you went to the early summer and you saw this, you rotated out. You got this move up here. And when I was talking in the Thorpe stream, one of those late nights, it already made its move. I already bought here in this area. And I think it was the Sunday. So it was here. So it was a Sunday of this week. So Friday ending July 12th, the week of July 15th. So during that weekend before July 15th, Sunday, Saturday, one of those days, I was telling them like, hey, buy this stocks, buy DHI, buy TOL, buy blah, blah, blah. I have a screenshot of it. And the next day, Monday, didn't do anything. But then Tuesday, I think there was some kind of news, popped it up, shot it up here. Okay, great. So even though you didn't get down where I got in, at least you got some of that move. And eventually, it's still doing okay, but it's choppy. It's really choppy here because right here we're getting above this top resistance. And guess what? So it had bad earnings, goes down, goes back up, tries to escape it. So we're stuck here again. Now, I would be worried a little bit because I don't think it's just going to be a straight shot back up like here, like it did in July. But again, that really depends on election and if it's resolved quickly. It doesn't matter who wins at this point. It's just like, can you just tell us who won right away? Because if you're just going to last like several days into it, this is bad because Jerome Powell has to make a decision on what the interest rates will be. And that will decide, boom, where we are going with this type of sector. So there's a lot of sectors that have interest rate built into it. So home builders has been expecting interest rates to calm down earlier than actual bond market. If this thing does not resume, then yeah, the bond market is not going to do well. I assume people are just going to bet that the bond market is stuck at a high range for longer. Not good. So we got TLT here. I bought down here in case like the bond market does recover and interest rates do pull back after Jerome Powell and after elections. But I'm not really 100% convinced that will happen. I think we'll have a lot of volatility still moving up and down in the blue area before we continue back up here into next year. Yeah. But if that does happen, then yes, I would say home builders are a buy if you got in at that low. And if you are, you can try NAIL. NAIL is a 3 times ETF. So if you're not doing options, you can do that. But if you are doing options, maybe there were some options to buy yesterday morning at the open on ITB. That's one ETF. There's another ETF too. I forgot. I think it's XHB or something like that. XHB. Yeah, here we are. Yeah, see, I remember that one. XHB. I don't know which one is good for options. So you're gonna have to look at both, see what the options contracts look like, and see if you can make a bet on the long side. Because if you look at the weekly chart here, you see it's trending up. You know, I don't think it looks bad to bet long, but hey, I can't predict the dang future correctly. You know, I'm just guessing. Everything is just hypotheticals here. We're just going on probabilities. The probability of a bet here is a lot better than me betting a long up here, right? So if it's going down near the bottom, but again, it could be that this thing still has a little bit more to go. Like it's gonna drop to here, and then this is a better time to make your bets. So let's say the election's not decided. Let's say it pulls back into Jerome Powell, and then Jerome Powell says nice, sweet things next Thursday, and it pops back up. Then yeah, maybe here is the better time to buy. All right. So just keep that in mind. Keep that in mind. Hey, what's up, San Jose? What's up? Okie dokie. I think one thing I want to mention here too is that if you were betting on things, like let's say you noticed that the bond market was the 30-year, right? Because we have mortgages, it's 30-year. If you noticed that it was making a new low yesterday, but it was forming a bottom, you probably could have guessed that this was also a good thing to buy. So DHI, so this is where DR Horton was, and you probably might have day traded it. Yeah, right. This probably is a good example of like doing secondary indication, because you know this stock is interest rate dependent. You know that the bond market is at a bottom, and so when you see this, you kind of would say, if you wanted to make a bet for the day or do a swing because you think the bond market is overextended at the downside and it has to recover at least, then yeah, this might have been a good idea to do a day trade, because the first candle on the 10-minute was quite positive. So there was a lot of buyers here. And then you could have made an entry on the next 10-minute down here, and you could have said, hey, okay, I'll do this. I'll make a stop over here and I'll just day trade it. Right? That's probably what I would do, maybe. But yeah, I'm not a day trader, so I can't say if a day trader would take that into account. Like, oh yeah, I need to know the bond market too when I day trade it. I don't know, maybe, because yeah, I mean, if you look at an upper time chart like that's perfect. Yeah, I probably would have day traded too, because here you see it hit the bottom, so you know that these were major tops here. These two tops. This one. So then if you, and this is a significant red bar here. So you could have said like, okay, this top of this bar probably is important. It's also matches with the top of this green bar. So you would say like, hey, it went back down there. Why not? I'll take a shot. So you take all those, that information into account, and you would just make a bet like, hey, I'll just buy here near the bottom. I'll set my stop short. So like if the stock went back down, I get out really quickly, but just in case it goes back up, yeah, maybe that would have been the play to make, just based on multiple pieces of information. So the bond market also gave you that information as well, because here the bond market was at below that blue area I checked. So it was oversold here. If it tried to make a recovery, it would have to do it soon. So yeah, just something, just FYI, you know. Happy hump day. Happy hump day. Okay. Let's see what other videos I got. Oh yeah, maybe I should talk about semiconductors today. So, you know, it was really interesting yesterday. Like it went up on no news. So you look at the semiconductors, and there's no earnings, right, until after the close. But for the whole day, it was a straight shot up. Straight shot up. Really weird. And it was close to the top of the range, right? It was trying to get up there. Like somebody was pumping it like crazy. Because here you got a lot of high volume. Once it reached the top of this blue line here, the upper blue line on, man, what the hell was I saying? Blue? Am I colorblind? Yes, pink. Yeah, so I set this area here, set here, and for some reason, someone pushed it up again because I thought it was going to end right here. And then it went up and it went through it. I'm like, what the? And then before close, like an hour before close, someone like came in with a lot of volume just to push it even further. So yeah, when you see stuff like that, like I'm not gonna say, oh, it's manipulation, but hey, you're pushing up on no news, a very important sector for the NASDAQ, into earnings for AMD. You gotta get suspicious, right? So anybody who was holding any shares of AMD at that time probably should have said, "Nah, man, I'm getting out," because that was a perfect trade from here when I got in Wednesday, and I got partial profits on Thursday in the open, and then Friday on the open. So that was all last week, and I didn't really expect it to push it all the way up here before earnings. But when it did that, I just said, "All right, I'm gonna take some more profit here." So I have some leftovers in SOXL that I'm just holding for Intel and Friday, but I don't expect anything. I could just lose my ass on the rest of my positions there. So that's why it's tough. Trading is tough. You're not going to be perfect. Like I'm not going to be like, "Oh yeah, I was so great. I got this bottom and this exact top." No. What I do is I buy a little bit here. I mean, I buy a lot when I know it's a big bottom. Like I know it's an important bottom. I'll buy a lot. And then I'll take a bit of profit when it climbs up to the next points where I need it to be, and I'm done. I'm not gonna be a hero. Okay, that's what they call being a hero. You want to be a hero in trading? Go ahead, be a hero. Hold your positions 100% all the way through multiple days. Most people will not do that. They will take partial profits or they just scalp and run off. Like, so if you're just a quick trader, you just want to get some percentage each day, yeah, you would have just got out. But if you're a swing trader like me, I'm just going to take partial profits though. I'm not going to hold it to like, oh, I know it's going to go up here to the top of the range or something like that. No way. I'm not going to be like, oh, yes, 223. I know it's going to hit 240 someday. I'm not doing that. I'm going to take a piece at a time every time it hits, and I'll hold. And once I get my profits, I'm more comfortable to hold the rest for the bigger move, because maybe it will get to 240 and above, right? But I already got my money, and I'll just leave the rest on the table, just in case it can make that final move. And that's going to require Apple, Intel, and the jobs report Friday morning. All three of those have to hit right for that thing to get above 240 plus before elections, because elections is right around the corner after that. So that's a tough call, man. That's a tough call to prove that, because if it doesn't go well, we could just crash right before earnings. This thing, SOX, could just go right back to 216 right here in this area. I could see that happening too. So a lot of this stuff, you have to do scenario. You have to do scenarios, because nobody knows the future exactly. And you just have to assume, like, okay, what's the positive and what's the negative, right? And then make a scenario where, like, what if everything goes bad? What's the price? What if everything goes good? Where's the price? What am I willing to risk? And then from there, you can make your trade. You decide, like, okay, if I'm a long, then this is what the price I have to see, because that's the risk I'm willing to take. And yeah, do it that way. There's no guarantees. I think, okay, I'll show you because I made this dumb chart here. I just drew some charts way back when it dipped in August. Okay, I said there was two scenarios I thought were the most likely. It was the purple one. Okay, let me hide these. This thing is too noisy now. Okay, it was either this purple line here, and I could hide this too. I could just make this a line or something. Here, I'll just temporarily make this a line. Right. Okay, so I said like it could either be this purple line or this blue line. Now it was matching this purple line more than the blue, and it hit right here. And then news hit later September, and it pushed the market even further. So once I saw it wasn't following purple, it's definitely not following blue, I was still bullish. So I was like, okay, I can't be bearish for October like I usually am. Because usually October is a bad month going into after Rosh Hashanah, after Jewish New Year's, before Sukkot. So now we're at Sukkot and we're moving back up, right? So that means everything is still going sideways. Everything is still going sideways unless something really crazy happens. Yeah, something really crazy happens. That's still a possibility. Still a possibility. Okay, let me go back to that. Okay. So what's the next thing I want to talk about? I think I'll play some videos for you before we continue on, because I have some other earnings to do, like Reddit. Reddit is up 40% today. Ooh, it has special profits. Ooh, man, it had a surprise profit. Reddit is making tons of money. And well, not tons of money, but hey, it's a surprise. So that's another stock I want to talk about, along with WGS, GeneDX. So if you did not like 23andMe, because 23andMe is going to the shitter, you'll definitely like GeneDX. This is a stock to watch. And I also talk about GameStop because the chart looks really good. Is it time for another short squeeze play? Because the last time I was in GameStop was around here when I thought it could try to make it up. But once it collapsed, right here, Thursday, July 18th. Once you saw that, you're out. So if you bought here at the bottom of this range in July 1st or June, so like you did this play, right? You did this play. You did the play where here, you bought here, move up here, pull back. You try to wait and hold to see if it tried to make it back up to 40 from 23. It couldn't do that. Now we're at the bottom again. So if I pulled out this rectangles, you see? Perfect. So it's hitting this rectangle over and over again. Now, the last two times it tried to get close to it, but it's making a higher low here, October 9th, and then October 23rd. And then this week on Monday, we had a big green bar on volume. Boom. So GameStop, if you are planning to gamble on GameStop, this might be it. We got signs. I got enough signs here, high volume here on September 20th. Another high volume, higher than average anyway, October 28th. So I am watching this. I think today they had the CEO was doing something about they had a video on a conference or some stream. I have no idea. There was something going on that these guys, I don't pay attention too much to these gambling meme stocks, but definitely something to consider, because when you see this, so DJT was a meme stock and it might be over for it, right? Because we're getting to elections. People are probably stop being interested once DJT hit his target, because anybody holding DJT now is trying to gamble into the elections. And most of the move here from 12 to 50 is done. So they're out. So anybody making profits from that or looking for the next meme stop to get into, it's probably going to be GameStop then. So I think all that money is going to pour into GameStop to pump this guy up next. So if you remember the meme stock era, everybody was rotating into different meme stocks. When they got tired of one, they went to the other, then they jumped to the other, they jumped to the other. And when Jerome Powell next week on Thursday says like, hey, interest rates are going to be like this, that's going to add liquidity into the market. And we're going to talk about liquidity either this stream or I'm going to do one later today, and I'll talk about it over there. Okay. So there you go. There you go. So let's go to the video. I have other video to show you guys. If I can find it, man, I have tons of videos. Yeah, I don't even show all the videos I have that I downloaded to see if anything's interesting. But yeah, there's tons of things. I think this one was AAA bond market. AAA bond market. Oh, I might not have downloaded it. Did I? Let me see. Yeah, I might not have downloaded it. Okay, well, we'll go to the next one then. I'll download it after this one. So this one is the NYSE wants to do 22-hour trading. This one's pretty dang important.
There are only so many hours in the day, 24 of them, and now the New York Stock Exchange wants you to be able to trade during most of them as well. The exchange announcing plans last week to extend trading to 22 hours a day, 5 days a week, despite some questions about thin volumes during those extended hours. Here to discuss the change is Lynn Martin. She's New York Stock Exchange president. Lynn, it's great to have you here. Welcome.
Thanks for having me. It's great to be here.
What spurred this change, and when would it be implemented?
So we initiated this change as a result of feedback we had from the market and the observation that the U.S. is increasingly becoming the center of the global economy. As a result of our clearinghouse, DTC, electing to extend their trading hours or their clearing hours, we thought it was important to extend the hallmarks of the New York Stock Exchange: the reliability, the transparency, the scalability, the resiliency of the New York Stock Exchange to allow those customers who choose to manage risk during the extended trading session, they're able to do that through the NYSE Arca platform.
Should we expect, Lynn, as you've made this announcement, that we'll soon hear something similar from NASDAQ, from the other U.S. exchanges? Do you find it likely that you would be the only one to offer this, or do you think we're moving in the direction of having trading available pretty much around the clock on every platform?
From my perspective, the most important thing that we're focusing on, that our team is focusing on, is to work with the ecosystem. So to work with the market participants who are looking for a choice during the extended trading session, and to work with our regulators too, that our rules are approved to allow for those customers who choose to manage risk during this trading session to do so via the reliability, resiliency, the hallmarks that the NYSE provides to the market.
I still hear from a lot of people who were on the floor when we were down there in the closing bell days, and Lynn, a lot of them think this is a step into the future maybe for the New York Stock Exchange, and to some they say, is this a step towards being the NASDAQ, towards being a fully digital exchange and one where the human element is more or less an artifact?
The human element has never been more important than it is at the New York Stock Exchange today. And it really has been that way for the last 232 years. Now, if I look at the amount of messages we process on our matching engines through our network, the amount of messages is approaching 1 trillion messages per day. However, the most reliable outcomes have that human overlay. So the role that the floor continues to play in the orderly trading of our markets has never been more relevant. And in fact, we've been able to quantify that with the amount of volatility that has been dampened as a result of the interaction of our floor with our robust order book and our market-leading technology.
Absolutely correct. People feel that the human element actually dampens volatility and wonder if this is a sign.
All right. All right. You see this? You got Robinhood doing 24-hour trading. Yes, Robinhood has overnight trading. That's why I recommend people that, you don't want to do futures trading. You don't want to understand futures or learn futures. The easiest way is Robinhood because they offer so many stocks now to trade overnight. So if you're doing China, right? And China doesn't have futures trading in the US. So unless you have like a spouse or somebody that you can access their account in the Hong Kong markets, you can't trade China overnight, and that's a disadvantage. So yes, there are already brokers that will let you trade overnight on some certain stocks, right? So you got Robinhood, you got Schwab, and hey, these guys, they want you in the casino. So this tells me you guys haven't been in the .com era like I have. The .com era was amazing. People were gambling like crazy. During that time, I think E-Trade was the first platform allowing people to trade online. Before you had to call your broker, you had to actually put in orders through a phone call. That was really annoying. So this was a game changer. And now we're getting more and more brokers and even the actual trading platforms underneath with the NYSE. So the whole market exchange, they are going to do it. So guess what? It's going to be like crypto, man. We're going to see pump, 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 pump. So if you got a lot of liquidity coming in, so I'm going to talk about liquidity in a bit. I could foresee in the coming several years where we could have one last push up in the markets. It's a big bubble move. And that will set up the big crash in maybe 3 to 5 years. That's what I'm expecting based on the cycles. So anyway, how will cancellation look? There is no there. Yeah, that's exact. The candlesticks won't matter. Honestly, candlesticks are arbitrary at that point. Yeah. So that's kind of like crypto, right? You're arbitrarily choosing when something opens or closes in the crypto markets. And that's why when you chart crypto, it's very important what interval you pick. And actually, that reminds me, some charting platforms do things differently. Like, so the New York markets in the US open from 9:30 Eastern to 4 in the afternoon, right? And if you do an hourly chart, how do you decide where that 30-minute is? So some charting programs will do 9:30 to 10:30 and consider that one hourly candle. But some charting programs will just do 9:30 to 10, right? And not do, my bad. 9:30 to 10:30 is the hourly candle, and then 9:30 to 10 is the hourly candle. So how you decide that? So it's not even divisible by an hour. So depending on which charting program you're using, those hourly candles could be different. So that's why, again, like, it doesn't matter. Honestly, it's all arbitrary when a candle opens and closes. And when you decide what interval to use is really important sometimes to determine where you trade. Because if you do it wrong, you could find out that it's more optimal to trade when you use the 9:30 to 10:30 as the hourly candle versus the 9:30 to 10 as the hourly, quote unquote, hourly candle. You just take that half hour as an hourly candle. See, right there is already a problem. Right there is already a problem. I didn't want to discuss that right now, but you just reminded me about that. So I think I will have to discuss that because personally, I use 65-minute candles when I do when I chart like ETFs that just do that open, or stocks that just open on the NYSE. I just use 65 because I divide the whole thing evenly into 65 minutes. So you can have even number of candles that way and you take out that effect. So yeah, that's a big thing. And when you do crypto, yes, that's another problem. So you have to figure out like how you want to do it, right? How you want to do it. What I found personally and what I've seen other people do is they divide things by 5. So when you do a week. So you do a week's candles worth of data, you divide by 5 to get the daily, right? Because of 5 days. But then when you do crypto, it's not divisible by 5 because they're open 24 hours. I found that dividing by 6 is better. So you do fractals by 6. So if you do a week, then you divide by, so you do the day, right? So assume each day is there, but you don't do 7 because there's 7 days a week, because I don't want to do that. So I'll take the difference between 7 and 5 and do 6. So I'll take the day and divide by 6. So I got 24 hours divided by 6. Take that divided by 6, and so on and so forth, down to the smaller time frames if I need to. So if you're trading crypto, yeah, you'll find out that there's certain ways you have to set up your chart correctly to get the right signals. Because if you don't do it correct, if you just assume it's trading like how the normal stock market is, where it just trades 5 days a week, right? That's a problem. It's not going to be 5 days a week. So that's what. Oh man, Eric, bro, you got to go all the way back to the beginning, man. Charts are fractal. Everything is fractal. The patterns are fractal. You can go look up the golden ratio, things like that. Yeah. So anyhow, so consider that. Put that in your mind. We might have to talk about that some other time in one just big discussion. So yeah, that's really important. You tripping, bro. See, this is why you're not going to make money, Eric. If you don't know the universe is fractal, you won't see it. You see the swirls in the galaxy out in the universe, and then you see the swirl in your toilet bowl. That's the same shit, baby. Because everything is a pattern. Patterns within patterns. And if you know that, you can make money, because that's what the small hats do. Man, Da Vinci Code trade. Hey, you keep joking. You keep joking, but you don't know. You can go look up WD GAN. So this guy was actually using the orbits of Pluto to be trading. So this guy was far out there. He was trading corn. So look up WD GAN. He was trading corn and wheat based off where like the planets were. So I haven't even gotten to that level yet with you guys. But if you want to trade commodities, yeah, that's the real trading. They were crazy. Those guys were real nuts about the horoscopes and things like that. Shit. But personally, I'll tell you this. All you got to do is do simple charting. Look at the lines, look at the support. That's all you need. You don't need to go into deep detail on it, but you still need to set up your chart correctly. So if you do crypto charting, all I'm going to say is like, it's not the same as doing it on stocks, right? You got to do different intervals. You just can't be doing the same ones you do on stocks because they trade different hours. And with the introduction of 24-hour trading or 22-hour trading, whatever they're doing here, it might actually affect how you chart. So you might have to adjust it. So that's all I wanted to mention for now. So let's continue.
That it could be going more by the wayside. You mentioned that markets, Lynn, are the ones who are pushing for this. But what do you mean by markets? Is it institutional and players largely who are seeking this kind of optionality and not so much the retail audience?
We're seeing demand from retail, but again, we're seeing demand from participants around the globe as the U.S. markets are increasingly becoming the center of the global economy. That demand comes from all parts of the world. It comes out of Asia, comes out of Europe, certainly out of the U.S. as well, the U.S. retail. So we thought it was our responsibility as the world's largest exchange and the steward of the U.S. capital markets to take that responsibility and to offer the reliability and resiliency that only the New York Stock Exchange can offer.
So the concern that I heard from some market participants over the weekend is that this is a change that big institutions, hedge funds, and maybe some of those massive brokers who we are aware of in the markets, that they would love this opportunity because markets are thinner in those extended hours, meaning they can probably capture bigger spreads vis-a-vis a retail trader, for instance. So do you think that it's true that this would be largely advantageous to big institutional players and not something that is so much meant to be catering towards the retail investor?
mean, our job is to be a marketplace and to offer access, democratized access to everyone who seeks to manage risk.
Oh boy, manage risk, democratize. Okay, you heard that about the spreads? Oh, yeah. Retail is not going to take advantage of this. Definitely not. The market makers are going to make big plays overnight and screw everyone else. So now, I think one thing they mentioned was that the U.S. markets was a global market because a lot of U.S. Listed companies actually affect the whole global market at this point, and that's very true. So I'm going to go on a side note here and talk about Vulcan Materials Company. So it had earnings today, and I was really curious how it did. Because if you remember, I talked about this Mexican cement company, Cemex, and Cemex is a big cement company for North America as well as Central America. So a lot of Mexican cement is done across the whole Northern American continent. So they are well concentrated in one market. Now, if you look at this one, CRH is an Irish company. Okay. It also does cement. But if you compare the chart of CRH with Cemex, there's a big difference. See, there's a big difference. So Cemex is more of a range bound look to it. It goes up and down, has a more range bound look. And I can look at the monthly chart so you can see it more clearly. So it has more of this cyclical pattern, right? So it's very tied to how North America is doing in terms of construction. Now, if you look at CRH, it has more of an uptrend. And that's really the difference. You are in a company, CRH, that has a global reach. CRH has cement everywhere around the northern hemisphere. So a lot of CRH does work in plenty of countries. Yeah, in the north, I think mostly northern hemisphere. While if you look at Mexican cement, Cemex, CX, it has a more cyclical pattern because it's tied to what Guatemala or the US is doing. So it has booms and busts in construction. But CRH, there's different kinds of booms and busts, like on China, Uzbekistan, Germany. So it can spread out its growth across different countries. So therefore, now, like, let's say I didn't even read that. All I need to do is look at the chart. So that's why I keep telling you guys, like, a lot of people, they just won't have time to dig into each company and go like, oh, okay, how does this company operate? How does that company operate? Forget that. The chart will reflect the fundamentals. That's what my point is. So you saw that video, the NYSE president was saying like, yes, we are a global marketplace. So all these companies are listed, Irish company, Mexican company, listed in the NYSE or NASDAQ in America. And the point is they're trying to get your money. So the American market is the big global market. So it doesn't matter what kind of company it is. If it's big enough, they will try to list here. But in any case, this is the side note that you can figure out what a company is just by looking at its chart. How come this cement company acts differently than this one? Right? And maybe you don't even need to know the reason. Just look at the chart. You look at the chart, you can figure out this one's stronger than that one. I don't know what the reason is, really. I don't really care. But from that point of view, I would rather buy CRH than CX. And that's that. And this has done pretty well since 2011. We got $17 on CRH up to 96 today. So I'm very curious. So Vulcan Materials, going back to this one, VMC reported earnings today. This is because Vulcan Materials also does cement, among other things. So if it's doing good, I'm going to assume CRH is going to do good. And it's going to report earnings next week, Thursday. So if you see a lot of materials doing well like this, and a lot of construction doing well, then let's go back to what I was talking about earlier about home building. So the home builders are on top of this chain, right? So they're going to need cement. So if I'm going to bet that home builders, the ITB ETF is going to recover and go up on lower earnings, then that means I need to see these stocks, lower interest rates, not earnings. My bad. I'm going to have to see these stocks do really well next week. So CRH is going up because of Vulcan Materials. So it's just going up 2% just because Vulcan Materials did well. And next week we'll have earnings. So let's see. So we got Jerome Powell. We got that earnings to look at. So yes, this is how it is. So yeah, some companies have shitty websites. I mean, honestly, I just look at charts. I assume that investors know what they're doing in the market, and you will see it in the charts itself. Any short-term moves, it's just retail doing bullshit. That's just it. Yeah. Where can I send you a link? Not but view later. Oh, yeah, you can email Portia. So email Portia Tropes. So any questions, yeah, you can, or things, you can email her. Because she was gonna give us all company emails, but I don't think that's set up yet. So let me see. Portia. Yeah, I think it's in the banner too. The banner's scrolling through. Yeah, that's the same. So you can email it. Yeah, we were all gonna get different emails. John, us, we're gonna get like so all of us are tied into one domain, jghb.info, something like that, like GETCRACK at blah blah blah, something like that. I don't know. It's not set up yet still, as far as I know. So you can email her and see what it is. So definitely, yeah, I would be interested in like some AI stuff. That probably would be in the future, and we have to do that. But that's really more advanced. I'm because I don't need to make money quickly at this point, since I just sit on my lazy bum ass and just move my money around, and I'll be happy with like 5-10% at like but I know you guys need to build your capital quickly, and therefore I'm going to introduce more crazier stocks. Like here's another one, the JKS, Chinese Solar. You know what? If I was a trader, boom, this is the stock for me. Like $20 to $30 back to like this is perfect. High volatility, high beta trading. So you see, if you bought it before like the Chinese did stimulus, it's $17 to like 36. And solar companies are such ass, but they're great for trading. Like you see this, like Nova, like here, $3.50 going up to $12, go back to $5, and it's gonna have earnings today. So yes. If you or Snapchat, right? Look, $16. Oh man, 16%. I mean, look, you bought here 8 because okay, let me look at the chart here. Snap. I drew the lines. Like Snap is always the gambler's earnings delight. They love this dumb stock because after it crashed in 2021, 2022, like all this stuff, like, ooh, it's been stuck in this range. So like you kind of like we're like, okay, before earnings, if it drops below the blue line, I buy. Gets above the blue line, I sell. This thing gets close to the blue line, I buy. Get close to the back and forth. Like this is perfect for trading. Perfect for trading. So today we see it's $13 a share. So after going below that blue line, yeah, I mean, if you're a gambler, this is the perfect stock for you. And Reddit, is something I'm eyeing because it had its IPO on March 24th. It's moving like this. And this gives me, even if I'm not playing it, it gives me an indication of how the market is feeling. Because when liquidity is good, you're going to see trash like Reddit, Snap, GameStop, all that type of stuff move up. It doesn't matter. Why? Because liquidity is there. And again, I will talk about liquidity after I play these videos. So we got to go through these videos. So the video I was going to play next was skip because I didn't download it. But here's something about the bond market. Okay, guys? Let's see. I just downloaded it. Here we go. Let's play this.
Saw the first AAA bond, commercial mortgage AAA bond being hit, backed by a single office property. And then we started like digging into basically the data to see what other buildings could get hit. And the result is there's a few. A ton of like the office properties across the US have been distressed for years. It just takes a long time for that to reach bondholders. And now it's starting to get there. So we kind of like analyzed the data. We saw at least like 12 other buildings are said to have some type of loss. Some will be at the AAA level, some will be just the investment grade portion, but there's definitely a lot of more pain to come.
Which regions across the U.S. are most vulnerable?
It's all over the U.S. actually. We saw there's buildings in New York, of course, Chicago, LA, San Francisco, but there's also buildings in Kansas City. Like it's kind of everywhere.
But if I'm holding a AAA bond, I expect to get paid back here. So what's happening to these bonds? Are they coming up for maturity and then the owner has to refinance the bond, or how's this all playing out?
Sure. So every AAA bond holder thinks they're going to get paid back.
Exactly.
That's why you buy it. But they like a lot of these buildings have not been receiving interest on the bonds for a while, and the minute like the appraisals drop and kind of like the owners of the buildings get rid of them or like sell them, the losses are realized, and the gist of it is that the buildings are worth like a fraction of what they were worth like a few years ago. So there's just not enough money to pay back everyone, not even the AAA holders, and that's the whole issue. Like the real estate is just not worth it.
When you're speaking to AAA bondholders, what are they telling you as far as why they might still be holding on to that? Like, what's the risk reward?
A lot of the AAA bond holders will get some money back, like the lower tranches won't. And I'm not sure if there's a market for that type of, like, those type of bonds at the bid they may want them.
And I'm looking at, you have a big take story, which means it has great graphics in addition to being well reported, well sourced. Some of these buildings, New York, Chicago, LA, West, 555 West 5th Street, 725 South Figueroa, I know that building. But these things are being valued at significant discounts, right? And some not even covering the amount of the outstanding loan. Yeah. So that's where the problems come in.
Yeah, that's the problem. And it's also like a lot of these buildings depend on one single tenant. So the minute that tenant's like, look, my lease is up, I'm leaving, I want a newer office, this building is really old, the bonds just drop in price because that's where they're getting the income.
I think anytime it comes to anything revolving around real estate, as we know very well, people want to harken back to the global financial crisis in 2008, but this is a very different situation, especially coming out of the pandemic. And talk to us more about how this is a very small subset of the bond market when you're looking at this.
Yes, definitely. Like there's definitely some type of echo to like similar to the financial crisis in the sense that like you don't really see losses on the principal level in AAA bonds. Like that hasn't happened since 2008. But again, like it's just a few bonds within the commercial mortgage-backed securities market.
Right. So when you're speaking with your sources, what are the risks of other broader ripple effects or any sort of other red flags potentially brewing? And then maybe the offside of that where there's more optimism of what could happen?
Yeah, I think like the risk is mainly for any building that's old, like, and that the tenants are walking, there's going to be issues. But if any new building that has a great reputation, has a lot of tenants, like that market is kind of booming. Like right now in new issue markets, like buyers are like just gobbling up the debt. Like, so it really depends on the building.
All right. So let's see. I had another one to do bonds, but I can do that later. We're almost going into the hour here. We're almost in the hour. And let's see how things are doing before we have earnings after the close. So we have Microsoft and Facebook, Meta. So those are going to be important before we have the bigger ones, Apple, Amazon, and Intel on Thursday. So those are the real big heavy hitters. So I had another earnings to talk about. Eli Lilly. So I told you this is one of my favorite stocks. Okay. Because it was in a nice uptrend, it's quite a while. So even COVID didn't really do much damage to it. That did quite well. But we're seeing trouble now. It already had trouble in July. So this is a big problem. When you see a move like this, a deep cut like that, even though it recovered in August, it's like it can't make a new high still. And then now you have earnings and it does this today. That's not really good. That means we're going to be in a range at least. Worst case is it goes back down to here, like $600. But right now it's like 830. But the range is set between 788 and 954. Set by this area. The last move up here, see that, and then we see the last high like around 950. So yeah, we're going to be stuck here. Now, why did I mention this? Because this affects Hims. Hims, I was talking for quite a while because it's a competitor for that whole diet drug market, Ozempic. So I was waiting for this. You see this huge volatile moves between 24 and 13. And today it's going down on sympathy. I didn't listen to the earnings call. I have no idea what Eli Lilly said about their drugs to compete with Ozempic and all that stuff. I have no clue. But I'm going to assume that based on how Hims is moving, it wasn't good, right? So this is a perfect opportunity. So watch Hims, HIMS, because if we're in this range here for Hims, and what I'm looking at is because I talked about interest rates, right, with the TLT, long bonds, and we were talking about duration several streams earlier. So when duration is doing well, that means small cap stocks and bonds are doing well. This is what the key is. Because if we are moving up and people are taking risks on long duration, that means they want to buy growth stocks like Hims eventually. So we need to see this move up. Today we get some recovery. IWM Russell, we see some recovery here. But still, we are in the middle of this range. There's no convincing move yet before Jerome Powell speaks next Thursday. So that's next Thursday, guys. And speaking of Thursdays, tomorrow will be Halloween. We'll have our costume contest. I think the current update is $900. Hey, if you guys get this to 1,500 before the contest, man, I'm going to throw in another $500. We are going to really make the contest go long. You guys need to put in your money. It doesn't take much. Especially if you're just gambling like me in the stock market. Anyhow, let's talk about Bitcoin. So yeah, Bitcoin. We got Bitcoin. Yes, it hit 72,000. Didn't I say it was going to do that? We are at the top of the range. Yes, right here. We hit it yesterday. So now we will wait and see what happens. I think it will make a pullback. And if it does go back down to 62,000 or something like that, it's time to buy. It's time to buy some more. And I'm looking at minor stocks like this. And we will have a minor stock reporting today after the close. Riot. That will be the first big miner to report anyway. So yeah, we will have Riot, ROIOT. So yes, watch that one, see how it does. Maybe it won't do good. Maybe that will give you an impetus to buy. But yesterday was quite interesting. Once Bitcoin hit 72,000, people just sold right off the bat. Like here, you see market open, the miner went up. Mara is another big one. That's the one I watch. And right away, it just sold off. People didn't want to hold it. Once you see Bitcoin make a move to the, like here, CLSK is the other one. Yeah, once you see Bitcoin making a move to the top, it was like, nah, forget it. I don't want to hold it. I'm out. I'm done. So yeah, we gotta wait a while and see how it goes. I think the only miners that are up, you got Wolf, Gwyneth Paltrow's favorite miner, WULF, and Hut. Yeah, I do have some Hut. Yes. So from the crappy miners, I have some of that. So yeah, if you didn't buy these miners yet, definitely wait and see how it reacts to 72,000. I think Core is another one. All Core. Some crap like that. Like, it's a pretty bad company, honestly. I don't know. Core Z? Is it Core Z? Yeah, Core Z. I don't know. Yeah. Yeah, okay. And this one. Oh. Yeah, the other ones is the quantum computing sector. Yeah, I'm gonna be eyeing these. So Qubit, QUBT, D-Wave, QBTS, Ionic, IONQ. Like, you see this? Like, it's up here. Pretty interesting looking charts. And we had Palladium, PLG. I mentioned this in the over the weekend. So now it's pulling back. So Palladium's pulling back. PLG going back to $2 because I think the miners are extended for gold and silver as well. So anything that's moved up on gold and silver and palladium and platinum, a lot of it was because of tariffs they're going to add onto Russia. So a lot of that is already done. So any news effects are done with that. I don't think, because I was expecting palladium and platinum to move up in December. So a lot of this early move now is just news driven and sympathy with gold and silver. So EXK down 4.5. So yeah, I sold Monday and Tuesday last week a chunk. I still have some leftovers, but yeah, you should have taken profits already. Wait for it to pull back. And it might be a slow draw into December. So I'm guessing that we won't do anything but go sideways for gold and silver until December and then move up again into spring. So yeah, there's still time. There's definitely still time. So if you did not get in the move with me in August or September, so EXK was one of those that I really recommended here. You see, August, September, this two areas here below the rectangle draw zone. Yeah, we're now above it. We got to wait a bit. It'll pull back. You can buy again. It'll go up again. Platinum is something I'm definitely looking at. I did not expect it to do this early push up, but we got a lot of crap about Russia, tariffs and bans and sanctions on palladium and platinum, so that kind of juiced it a bit early. PLG has earnings Wednesday, November 20th, according to TradingView. I think we'll have to confirm that if it's true. The other ones were the nuclear names. So we have LTBR, nano nuclear. These are the ones that Blacks Who Defy would talk about. So this one, LEU, Centrus Energy, it had earnings 2 days ago. I like the reaction yesterday. It dropped and moved up. You see this green candle? That's pretty solid. I like it. When it drops and goes up like this during the whole day with a high volume like this, that means it wants to continue going up. So even though today we have uranium miners, RNM. So this is the ETF for uranium miners. Uranium miners have been going down since last week, but you see LEU and the other ones who are more into the infrastructure side of things for nuclear reactors. I think, yes, definitely put them on your watch. LTBR, so Light Bridge, this one moved up 50% yesterday for some reason. I think it's probably a short squeeze. I checked out the short squeeze. Yeah, actually, I should probably mention, you can look up short squeezes by using iBorrow Desk. Okay. So let me show you guys this website. Yeah, maybe I should show you this website since I'm here. So go to iBorrow Desk. Okay, I'll put the link in the chat. I'll put it on the screen. Go here, iBorrow Desk. It uses the Robinhood data. So it looks at how many shares are available and what the interest charge is for doing a short on shares. Okay. So here we are. Here's the website. Okay, you can see that, right? So this is the iBorrow Desk website. So you can see what the popular shorts are. So let's look at LTBR. Was it? Yes, Light Bridge Corporation, LTBR. So let's look at that. So last week, going into last week, 25th. So here, 25th, you have 400 shares available to short. 0.6% was the interest to be paid for shorting that stock. Now you see the interest has moved up to 2.4 up since Monday. It keeps going up. Now it's 5.3%. And available shares is 45,000 on Robin. I mean, this is not Robinhood. This is, what's it? Man, what broker is it using? Let me see. iBorrow Desk is a tool for monitoring borrow rates, blah, blah, blah. Interactive Broker. Okay, Interactive Broker. That's what it is. So Interactive Broker is what it's using for data. So this is a good website to keep track of, And I could look at like Donald Trump stock, right? DJT, see what the short interest is here. And yeah, you can see it's quite popular. Quite popular. It's very hard to get it, actually. Like, if you look at the date here, you have 2024, 10/29, 16:45. So that's a 4:45 p.m. I think Eastern, right? That should be Eastern. But then you see no more updated data until 10:45 Eastern today. So that means a lot of people have been inactive shorting this. So if you look at the 28th, you had 300 to 250,000, 300,000, 250,000 in shares available, and then it just suddenly crunches down to 29. So yeah, if you're looking at a short squeeze, this is what it is. It's gone down since. Yeah, I mean, it's too volatile. LTBR is way too volatile. You have to get it at the bottom. So I only Black Suitify like told me about this stock, and it's like, oh, it's too late. he should have mentioned this stock like probably a week before earlier. Then it would have been like worth the risk reward. Now it's not worth the risk reward. It's way too late. It's squeezed already. So you see this period here where there's low volume. And then you see this moment here on Thursday, October 3rd. There was something happening here. You had a higher than average volume, and the candle moves up 17%. This is probably your indication that something was going to happen later. That was it. That was a telltale sign right here at that point. So yeah, this is what I'm going to have to do. I'm going to have to create scanners to detect this type of action, because when you see this, and if you're a gambler, you would have took a shot right here at $3. It might have been wrong. It might have been something, but you would have took a shot entry here and waited to see if there was going to be a pump. And guess what? In October 16th, this is what happened. You got this high volume pump and then pump, pull back, pump, and that's probably it. That's probably it. That's probably it for now, I think. Let me see the weekly chart. It's most likely that it isn't going to go higher because you see this? So always look to your left before you do anything. You look to your left. You look at the weekly chart. See, that's resistance. That's resistance. You're already in resistance here. So I wouldn't have bought here, right? Nah, it's too late. Yeah. Now, if you look at the bottom, let's see. We got here and we got here. So if you bought between $1.80 and $2.50, that would have been a good buy, just for gamble's sake. I mean, I wouldn't throw my kitchen sink in there, right? See? But that would have been worth a shot. And then if you zoomed in to the daily chart, you probably would have seen a pattern. You would have seen like, wait a minute. Why did October 3rd have a higher than average volume, push up 17%, right up into here, a local structure? You probably would have been. So that's the problem. We need to something. No, you can, man. You can. That's what I'm telling you. You can. If you can analyze it correctly, you can. You can. That's the thing. That's the whole point of this channel, is to just look at charts and figure it out. Now, if you have secondary indicators with options, you probably have more information. So this is the problem. I'm not good at options, but I bet you somebody who was reading the options chain of this stock probably could have figured something out, because there would have been options expiring towards the end of the month. If they saw something curious about the options, somebody there probably would have told you, hey, this was a stock to get into. So like I said, you looked at the chart, you saw this, using the weekly chart. You would have saw the range. You saw the bottom to the top of the range. You saw this thing happen. And then if you had options information, because somebody probably was trying to screw over some options holder up here to push the price up here before the month ends, yeah, that's probably what happened. That's probably what happened. That's about it. That's about it. So in any case, this is why you got to look at the charts. You really got to do it, man, because yeah, it just tells you so much information about ranges. If you know the range, you could figure it out. Like the TLT, you got the bonds and all that. Yeah, it's like right here, September 24th. I think this was when Jerome Powell last spoke. Think it's too late to buy. Yeah, of course it's too late to buy Reddit. I'm not gonna buy Reddit into elections and Jerome Powell next week. Hell no, I'm not gonna buy Reddit. But anyway, especially when you have an IPO, you don't even have like history on that chart. But definitely something to look at. Keep in your watch list, Reddit. I like keeping tabs on it, and even if I don't play it, you know, it's kind of a condition towards what is going to happen in the future. That's really what you need to use it for. So in any case, yeah, so like here, CNBC was like very bullish. You had tons of people, CNBC, Bloomberg, you had people saying buy bonds, buy bonds, buy bonds, up here at the top of the range. What happened after that? Sell off. And now you're down here and people are like, oh, bonds are terrible. Don't buy bonds, blah, blah, blah. Election. Well, you know what? Shit, probably time to buy bonds. Always do the opposite what the TV tells you, right? But you know what? You can just look at a chart and just discover that yourself. It's always like this. Always like this. Anyway. So yeah, I'm buying bonds. So high. Well, yeah, I mean, that's a meme stock. But if you buy at the bottom of the range, there's more of a chance you'll be correct than at the top of the range, right? So if you bought here, it's better than buying up here. I have no clue if it's going to go up anytime soon. But from what I see, you got DJT finishing its run. Okay. Then you have GME. Looks like it's going to start its run. And then I know that Jerome Powell is going to speak next week. If there's liquidity injected into the markets, that's when things will pop off. So yes, that's what I'm looking for. That's what I'm looking for. Anyhow, let me get this video downloaded for you guys, and we can go over this article. Yeah, we can go over this article. Because now it's time to talk about liquidity since I mentioned it so much. It's really important here to talk about that. Okay, so we're going to talk about reverse repos. Probably going to put some of you guys to sleep. But what can I do? A lot of this stuff is so boring and dry. But if you want to make money, it's required. It's a requirement. Here we are. Reverse repos. Reverse repos mitigate Fed's QT. What is QT? QT is quantitative tightening. That is what the Fed is doing right now. They are releasing their bonds. They are not buying bonds, but they're actively dumping them into the market. So this is a secondary thing that they do, in including interest rates. So interest rates is one thing that they control. Bond buying and bond selling is another thing they control. And there's a third thing they control called reverse repos. You know, a lot of stuff really requires you to learn what the Fed does. Even I don't know everything about what the Fed does. But this is why stock markets go up and down at the end of the day. It's what the Fed does. The Federal Reserve has continued to unwind the buildup in its balance sheet. It accumulated a lot of treasury debt and mortgage-backed securities. Yeah, MBSs, if you remember the 2008, 2007 great financial crisis. During 4 separate rounds of quantitative easing, QE. And since early 2022, it has been letting those mature and roll off. That action is referred to as quantitative tightening, or QT. QT is a bearish force on the stock market because it takes liquidity out of the banking system. But QT has been getting mitigated by something else the Fed is doing. Starting in 2021, the Fed began accepting a whole lot of reverse repurchase agreements, or RRP. An RRP involves a bank borrowing treasuries from the Fed to make its balance sheet look better. That bank pledges some of its loan book as collateral for the borrowed treasuries. The effect of this on the stock market is that RRPs lock up money in the banking system so that this money is not available to do things like help lift stock prices. Okay, you guys go to sleep yet? Better wake up. When the Fed started accepting these RRPs in 2021, the Fed was still doing QE4 at a rate about $20 billion a month. And so the liquidity reducing effects of conducting those RRPs did not matter very much to the stock market because QE4 was still pumping up the stock market. In 2022, the Fed flipped to doing QT, so quantitative tightening, while RRPs continued to rise, which was 2 bearish factors teaming up Oh, man. So the stock market understandably struggled during 2022. While QT has continued, RRPs have been getting unwound since their peak in October 2022, and especially since mid 2023. That drop in RRPs has helped to boost stock prices. So let's go back here. So QT begins, and then you see the blue line. The overnight reverse repurchase agreements started going down. Guess what? Stock market has boomed in 2024, right? So is it a coincidence or what? I don't believe in coincidences. Let's put it that way. I never do. I never do. Okay, guys, there's always a reason for everything. And just because you don't know what the real reason is, that means you got to do better research next time, all right? So that drop in RRPs has helped to boost stock prices as that locked up money goes back into the hands of banks so that it is available to help lift stock prices. Some analysts have theorized that this bullish force will end when RRPs go to zero. The latest data shows that the New York Fed is holding just $202.8 billion of them, down from a high of $2.4 trillion in 2022. But the Fed can always go back to doing regular repurchase agreements, not reverse ones, if the Fed wants to keep pushing money into the system. Rising RRPs are bearish, but rising repo agreements are bullish. The Fed did a lot of regular repos during the 2000s, and especially during 2008, before yanking the chair away just before the 2008 elections. I don't know why that guy wrote What does that mean? Anyway, let's continue on. The St. Louis Federal Reserve makes daily data available on their Fed website. Yes, they do. Actually, there's another website. I'll put this link up here for you guys. So the article's here. Okay. I'll put the link for the article I'm reading here. Okay, for the chat. Okay, guys. And then I'm going to go show you a website, a New York Fed website, that you can monitor this yourself every day. They update it pretty much every day, I believe, or every 3 days, something like that. You can go here. NewYorkFed.org/markets/desk-operations/reverse-repo. You know, everything is out in the public. It's just that people are too lazy to even understand this stuff, and even more lazy because it's all in the public. They're not hiding anything. You just need to know these indicators, these secondary indicators, and you'll be fine in the markets. You know, so I showed you one way back when about the margin accounts, FINRA data. Of course, it's released late, maybe 1 month to 2 months too late, but still, it gives you some indication. This one is released every 3 days. Like, all this stuff is available, but nobody knows about them or how to use them. And this is where you, as a retail investor and trader, are always behind the curve, you know? And because there's so many idiots out there that it shouldn't be too hard for you to just know some basics and be able to beat these guys. Okay. So liquidity is what makes the stock market goes up. I cannot stress that enough. So I gave you the link right there. You can go look it up yourself. The data is available. There are additional RRPs done separately by other regional Federal Reserve banks, but the New York Fed is the main avenue for big banks to engage in these arrangements. In our McClellan Market Report and our daily edition, we have taken to tracking the daily changes in RRPs quite frequently lately because of their strong correlation to stock prices. But working with these data requires the analyst to make a couple of adjustments. Okay. So you see this blue line, and how it tracks the stock market. Okay, that's a reverse repo. The first is to invert the data plot to better show the correlation to stock prices. The second adjustment is to shift forward the RRP data by 5 trading days to reveal how there is a bit of lag in how that liquidity impacts stock prices. That's right. The RP's data give us a week ahead roadmap for the stock market. Okay. All right. So we flip the data. Okay, we invert it. So RP is going down negative, more negative this way, and then we shift it by a week, essentially 5 trading days. Okay. So it's doing quite nicely here. Actually, you know what's interesting is like you notice these quarter end effects. Every time the quarter ends, there's always this big flush out of money. Yeah. So that's why, again, I keep telling you guys, every time the quarter ends, big things happen with stock prices. So always look at how stocks move at the end of the quarter. So end of March, beginning of April, right? Continuing forward every 3 months after that, into New Year's, right? End of December, beginning of January, stuff like that. So yeah, especially because like taxes are done every quarter for businesses too. Same thing. The Treasury Department also will have some effect. So how much money they get per quarter. So it's not like, yearly you have to do your taxes as an individual, but businesses have to do every quarter. So lots of things have that effect. So again, you should know that. Mark your calendar. The first is to invert the data point and a better correlation. Yeah, I read that. Okay, let's go to the next paragraph. One must also take into account the large and a quarter effect in these RRP data. I mentioned that. Banks tend to make big spikes in their RRP holdings at the end of each calendar quarter for the purposes of window dressing. I haven't talked about that too much. Window dressing. So you can look it up in Google. So at the end of the quarter, people like to push around stock prices to make their performance look better, and that will be called window dressing. These spikes get unwound right away once the new quarter begins, and these events do not seem to flow through into stock price movements. So when looking at these data at the end of the quarter, you have to just put a thumb over those spikes on the chart and ignore them for a few days. At the end of September 2024, RPs at the New York Fed spiked up to 465.6 billion, but have now dropped to just 202.8 billion. That represents a whole lot of additional liquidity being made available to the stock financial markets, and has not yet all had the chance to flow through into the stock market. So that's a bullish condition. Okay, that's real bullish right now. Anyhow, let's look at another video about the bonds. I have some more bond videos to show you, I guess. Just one more, so bear with me. Here we are.
He is the managing director and head of global rate strategy over at JP Morgan, and he joins us now to kick us off to the close. And Jay, let's focus in a little bit here on the Treasury's borrowing needs. I think everyone knows that at some point those borrowing numbers are going to have to come up significantly. It looks like, at least for the first quarter, they seem to be guiding in that direction.
Yeah, I think that's right, Romaine, and thanks for having me on this afternoon. In our baseline and the borrowing estimates we got, I think for this quarter, we're not too far off from our expectations, and for the first quarter, probably a little bit larger. But I think what we know is that for fiscal year 25, which has just begun, the Treasury is probably in a pretty good spot with its long-term auction sizes, but that the closer we get to August, November next year, as you sort of quoted from Ed Yardeni, there's a strong likelihood that Treasury will have to resume its increases to long-term auction sizes, probably in both a magnitude and duration. That looks just as big as we saw last summer through this spring. But in our minds, we think the Treasury is probably in a good spot for the next 9 to 12 months or so, even though these announcements for the first quarter were larger than expected.
And this raises a lot of questions, though, Jay, about the trajectory of interest rates. I mean, if we just take the benchmark 10-year, which, of course, right now back at that 4.2, 4.3 level, in a time where we were expecting that number to come down because of the presumption of additional Fed rate cuts. How is this all going to balance out? If the Fed does continue to cut rates, but the Treasury's borrowing needs continues to go up, is that just going to keep us pinned in a tight range on the Treasury notes?
Yeah, so I think a lot of this increase that we've had over the past month or 5 weeks or so, Romaine, has been a function of the action the Fed took last month by delivering an aggressive 50 basis point cut. I think it was a sign to markets that the Fed does not want this expansion to end prematurely, and there's a likelihood of better growth and inflation outcomes down the line, meaning less easing. And we've seen that because the terminal Fed funds rate priced into markets has risen from about 260, 270 in the middle of September to something like 350 right now. So it's certainly reflective of fewer eases coming down the line. But to your question on what it means when we intersect monetary and fiscal, in our minds, the primary driver of Treasury yield is always going to be the market's medium-term monetary policy expectations. But away from that, we do think that for a given level of policy rates, because of this 100+% debt to GDP ratio and a Treasury buyer base, which is shifting from price-sensitive or price-insensitive buyers to price-sensitive, it's just going to mean long-term rates remain more elevated for a given policy rate than we've seen over the last 15 to 20 years. So in all else equal, we really think it results in steeper yield curves as well.
So, Jay, when we look at the sell-off in Treasuries right now, I mentioned how Treasuries have resumed their sell-off from, over the past month, really. Is this actual positioning for an outcome, or is there something else muddying the picture, like hedging?
Yeah, so I think, Scarlett, that a lot of this has been fundamentally driven because of the shift in the Fed's reaction function, but also because the data has proven to be more resilient, both on the labor market and on the inflation side. But that being said, when we look at the move in long-term yields adjusted for sort of their typical fundamental drivers, it's been in excess of what we would have expected. And while it might be tempting to attribute this to a shift in electoral expectations, I think the bigger issue here is that we've not quite caught up to where growth expectations have gone. And further from that, positioning, at least on the duration side, was pretty long heading into the September Fed meeting. And it's been sort of washed out and is much more neutral right now. So everything I've heard from clients being on the road the last couple of weeks is that this has been a fair amount of de-risking and that clients would rather react to the election rather than proactively position for it, given how close it seems like it might be.
Interesting. So that means that we could see a lot of volatility in the days right after the election. I'm wondering how you're thinking about the sell-off that we're seeing in oil, because lower oil obviously helps to improve the inflation picture in the months ahead.
Yeah, I think it's certainly indicative of lower burn on geopolitical pressures, given what happened over the weekend. And while I think it might be tempting to think that it is certainly reflective of lower inflation and a better outcome for this consumer, it probably means we can go back to kind of thinking about the prospects for growth, inflation from a sort of more macro fundamental perspective rather than having to think about geopolitics, which means that any sort of premium that had been built into the rates market from the energy market is probably dissipated. And I think as we go forward, our colleagues in commodity strategy think that as we head into next year, it's likely to be that supply will outweigh demand, given ongoing strong supply from OPEC+, which means that oil prices, if we're in a more stable world, are likely biased somewhat lower.
And obviously, a lot of this is going to hinge on the outcome of the U.S. election. Two different candidates with some very clear differences in policy, and that could have a big impact here on Treasury funding as well as just how the market reacts to it. I am curious, Jay, just in the short term here, we have an election a week from tomorrow. Are you going to be up on Tuesday night watching the results? And if so, what parts of the market do you think are going to react, or are you anticipating are going to react first to the outcome?
First, Romaine, I'm definitely planning to be up late watching the results. And I think the parts of the market that I'll be watching, first, the short end of the inflation curve, because the work that we've done has indicated that if you see a divided government with a Trump victory, and that likely means more tariffs globally, that's likely to raise the price level by about 1.5%. And we've seen that through the summer as the probability of a former President Trump victory has increased. That has meant that short-term inflation expectations has risen, so I'll be watching that. Second from that, I'll just be broadly watching the slope of the yield curve, because you've talked about the fiscal picture, and we've said that a sweep in either direction is likely to mean meaningfully more borrowing than the baseline that we've heard from the Congressional Budget Authority. And that means, given the focus on term premium and the shift in demand that we've talked about, against the backdrop of what is a pretty strong economy, likely biases the yield curve higher and steeper, but to varying degrees, whether it's a Trump win or a Harris win in the event of a sweep. So I'll definitely be watching the front end of the inflation curve. We'll be watching the slope of the Treasury curve and the outright level of yields as well.
Right, that's a lot to digest right there. So yes, we have to look at what the congressional elections will be and how much of a majority the Republicans or Democrats will have. Yeah, it's pretty divided right now. I think Republicans will win the Senate at least, so the House will be really a big important factor there. I think it's just gonna be a slim majority. You're not gonna get like real easy super majorities. And again, what he was saying about tariffs, that tariffs are probably the only thing Trump can do without Congress, right? And that's going to be a big thing to consider when you're doing inflation. So yes, so the bond market will be very volatile in the coming days. But let's look at the charts again. He was talking about oil. So I think before results from Chevron and whatever, ExxonMobil, and we have ConocoPhillips tomorrow morning. So ConocoPhillips near the bottom here, near the bottom. So if you want to gamble, yes, I have been buying oil U, 3x ETN leverage product. So OILU, I've been buying here. So since Monday, I bought here at the open. If you missed that, you could have bought yesterday, still at the bottom. So below $30. So anything around $30 and lower, it's good. You might as well gamble. If you want to gamble on the earnings for the rest of this week, yes, you can get it. I think oil prices, U.S. oil right now, it's 68.83 on WTI crude per barrel, and Brent, see about $72 per barrel there. So, it could be at a bottom, and I think that's worth trying out. Definitely worth trying out for a quick play. But I think, yes, natural gas, all that stuff. So if you're doing Boyle right now, so if you bought Boyle again at $8, yeah, around here this week, yeah, just assume there's gonna be a small spike up into $10, and that's it for natural gas. So into next week. So that's about it. Tomorrow, 7:30 my time, 10:30 Eastern, will be a Henry Hub report. So that'll affect natural gas prices again. But mostly it's affected by weather reports. So far, we're going to prognosticate from what we have from the weather services in the U.S., a mild winter. So that's going to depress natural gas for the foreseeing winter season until spring. So if we're going to do natural gas again, we're going to wait till spring. Okay, so let's go into surprise news. So SMCI, surprise news, we have audit. So there was an auditor who was looking through the books of SMCI, and they quit. So this stock has crashed 32%. And if you knew about SMCI, I've mentioned this many times. I said this was a perfect example of a distribution right here, distribution schematic number 2, Wyckoff. So if you looked at it, it looks pretty damn textbook. So we are in a textbook move for SMCI, and we are in phase E, and we are down 32% on bad news. And guess what? Earnings is on Monday. So what a great time to dump bad news on people right after AMD earnings. So AMD had bad earnings, but it wasn't really dragging down the SOXX after market yesterday. But today, before market opened, they dumped that SMCI news and crashed everybody else. And actually, CKJ3 was talking about options on ASML. So I have a clip of that, and I'm going to replay that clip the next time I come up here. And he was talking about he was looking at some ASML contracts to buy. So if you were in options and you wanted to get in on ASML, this might be the time to get in. Very close. So we got 30 minutes into the close. So either today or tomorrow, you might see something. Hey, if it crashes down to here to 581, hey, that might be a great deal. I don't know, because we still have Intel and Apple to report on Thursday. So not guaranteeing that it will do that, but it might. Because I'm going to tell you this, Boeing, like yesterday, Boeing announced their shares issued. So they had shares. So here's the news right here. Boeing aims to raise $21 billion by offering 112.5 million shares at $143 each. Guess what? That's a pretty strong volume, right? Look at that volume. They were eating up those shares yesterday. So the shares haven't been sold yet, just an announcement. So we're still at the bottom of this red line. Here, we could still go down a little bit, but I would be thinking if you need a stock to hold long term and you need a blue chip stock, yeah, Boeing. Probably it. The second one will be Intel. We got to wait for earnings. If it drops down here again into this blue, teal, cyan, whatever, colored area, we got 19.66 up to 21.85. If we drop there into Friday, yeah, I would be looking to buy, maybe. At least starting to buy, because, you know, it could still go down further. There's a possibility of that. Let me see what the monthly chart looks like. Yeah, I mean, if everyone starts panicking, I mean, it has to be really bad, though. Because a lot of times, Intel will just say, yeah, we got bad earnings. Everyone expects bad earnings from Intel. But, you know, it's still good, then what's the problem? There shouldn't be a problem there. It shouldn't really break down any further. So, anyway, something to consider for Thursday. We have to consider that possibility. Anything can happen. So next video, we got Bitcoin stuff. Yeah, Bitcoin. Again, I was talking about how it hit 72,000 right on schedule. So now we are waiting. We are waiting for the big move. Will it break out now or pull back some? And we'll get where we want to get. I think a lot of elections are being funded by Bitcoin. And oh yeah, we have Coinbase earnings after the close. So look at what Coinbase is showing. Okay, if we see a lot of trading being done on Bitcoin or not. So watch for that after the close. Coinbase earnings. But in any case, let's continue on here. Tether. Yes, here we are.
Today, Bitcoin rises to kick off the week, and after the Wall Street Journal reports that stablecoin issuer Tether is under investigation in the US, Josh Garcia of Quetzal explains the potential impacts on the stablecoin's users. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Bitcoin is on the rise to start the last week of October and hitting its highest level in 7 days. By noon Eastern, the cryptocurrency gained about 1% and traded at $68,428. Ether, meanwhile, was unchanged, dropping just 9 cents in the past 24 hours. Solana, though, falling around 1.3% to $173. Okay, let's talk about the top stories. Tether is denying that the stablecoin issuer is under investigation for breaking money laundering rules. On Friday, the Wall Street Journal reported that the federal government was investigating possible violations of sanctions and anti-money laundering rules. That's according to people familiar with the matter. The Journal said federal prosecutors in Manhattan were looking into whether Tether was being used by third parties to fund illegal activities like the drug trade, terrorism, and hacking. And at the same time, the report said the Treasury Department Department was considering sanctioning Tether for USDT's use by sanctioned individuals and groups. Well, in a blog post that same day, Tether slammed the Wall Street Journal story, calling it, quote, irresponsible. Tether said the allegations were reckless and that the story glosses over Tether's well-documented and extensive dealings with law enforcement to crack down on bad actors. We reached out to the Southern District of New York and the Treasury Department about the story, but haven't heard back yet. Tether is facing increasing competition in the stablecoin space from the likes of Circle's USDC and traditional fintech firms like PayPal with its PYUSD stablecoin, and Stripe, which just acquired stablecoin platform Bridge. We've also seen Tether face concerns in Europe about compliance with the region's crypto regulatory framework MiCA. Coinbase told users in the EU that it would delist USDT and urged customers in the region to move to a compliant stablecoin like USDC. That's because Tether has yet to receive the required e-money license from European regulators. So this latest report from the Wall Street Journal is just the latest sign that Tether could be facing tougher scrutiny from regulators, as it also faces growing competition. So for our main story, Crypto World's Jordan Smith spoke to Josh Garcia, partner at compliance and advisory firm Quetzal, about this news and what it could mean for Tether.
All right, Josh. So we had this report out from the Wall Street Journal claiming that Tether is, under investigation here in the U.S. potentially, and we had Tether come out and say that it's denying those claims. But we've sort of seen more and more scrutiny of stablecoins and potential regulation around the world as this part of the crypto industry becomes more popular. Just first, what's your reaction to this news and what it means for Tether or stablecoins in general if we are seeing more close scrutiny from the U.S.?
So my view on this is if a $3 billion fine to TD Bank doesn't shut down that whole bank, then an investigation into a global stablecoin is not going to shut down Tether. I think there's a lot of alarmist language around what this actually means. And it means, some of Tether's currency may be involved in money laundering, just like cash. May be involved in terrorist financing, and the DOJ has an obligation to go and find and root out those sources of fraud and money laundering wherever it exists. I'm not surprised that as a global stablecoin grows in popularity, it's going to get the attention of regulators who are concerned about those kinds of issues.
Yeah, I mean, you lay out two sort of different positions to take there. You've got the actual legal ramifications of this, and that may not have huge impact to Tether, but there is the narrative side of this and how people actually feel about it. And I guess I'm mostly curious about what this means for Tether and the uncertainty going forward for Tether, because it's already faced questions about its business. And you have places like Coinbase pushing European customers to competitors like USDC, saying that it's, Tether's not compliant with MiCA. Does this seem like the best time to face reports like this, or do you think that will have more of an impact than whatever fine or legal ramifications they face?
I think it's incredible, and in a good way, that we're holding an entity like Tether to the same standards that we would hold an entity like TD Bank, right? That's great for the industry, that we can look at this entity and say, look, you're doing a lot of good things, and there's a lot of completely legal things going on, but there's a portion of what you're doing that's not legal. I think that not attributing this one bad element of crypto to the whole of Tether, it like that is the challenge that we face as an industry, right? You have banks that have the patina of legitimacy just by being chartered by a state or federal agency. No crypto startup is just born from someone's mind with any kind of license attached to their name. So you have so those entities have to fight and claw for legitimacy. And this is what that fighting and clawing looks like, right? It is not a good time for Tether, but it's going to have to scramble upwards as it deals with more challenges than probably a licensed or otherwise regulated institution would.
If I can hop to a conversation around reserves, I think one of the other chief questions that Tether has faced is its reserves and whether it's over collateralized, how it's backing these stable coins. You had CEO Paolo Ardoino come out over the weekend and affirm that the issuer holds about $100 billion in U.S. Treasuries, about 5.8 in Bitcoin, and then some, billions of dollars in gold. How are you thinking about Tether's reserves right now and how it stacks up to, say, some of its competitors like Circle's USDC?
What's interesting is that competitors, they all look very much alike when you look under the hood. So PYUSD is basically a white labeled Paxos stablecoin. Circle, USDC, they have, just like PYUSDC, a tremendous amount of treasuries. There's no such thing, I think, as a fiat-backed stablecoin. Stablecoins are treasury-backed, just by their nature. So the majority of the holdings of Paxos, PYUSD, of USDC, and of Tether are US treasuries or other government treasuries, which is kind of surprising to a lot of people in crypto.
We see behind you that you're at Money 2020 right now, and I'm just curious, what the conversations around crypto have been like there, or stablecoins specifically. So since we're on that topic, we've heard this year that stablecoins are all the rage again. Is that something that you're hearing from people out in Las Vegas? What's the conversation like there?
Well, the bridge news is really dominating the conversation. A lot of people are talking about how stablecoins as a business model can make a lot of sense for traditional financial institutions, or even more edgy fintech financial institutions that have been around for a while. So it's a lot of talk about acquisitions and M&A activity. But as far as as far as the narrative goes, which is what you brought up earlier, you have a lot of people saying switch USDC from Tether because of this news. And it's a little, like, as I said, I think it's a bit alarmist to think that way, because I think every stablecoin issuer is going to come up with some regulatory issue if they get successful. So I think that this is a normal part of Tether's story. But a lot of people are seeing this as an opportunity to say, nope, Tether's going to die, switch over. But that's crypto. It's very, it moves very fast and likes to push narratives that add to the drama.
Final question to that point around regulation. You mentioned that a lot of stablecoin issuers could face regulatory pushback. There was a lot of hope that we would see stablecoin regulation here in the U.S. This year. It's looking less and less likely as we get to Election Day and potentially a new Congress coming in January. Don't quote me if it actually happens before the end of the year. But I guess, what would you want to see from stablecoin regulation in terms of reserve requirements or disclosure or protections? And do you feel like the bill before Congress right now sort of captures those requirements that you think the stablecoin industry needs?
Yeah, what I want to see from stablecoin legislation is something that helps a startup, because a lot of my clients are startups, helps a startup get its way to national or nationwide licensing without the current expense and difficulty of dealing with all 50 states. So if there's a more uniform licensing regime available to a stablecoin issuer, that would be gold or platinum standard for me.
Okay, that's all for Crypto World today. We're back again tomorrow. We'll see you then.
You didn't say about something about gold? Oh man. All right. Well, that's the next video. How convenient. In any case, I gotta show you the chart less than 15 minutes before the close. So we got semiconductor ETF stocks just made to the bottom of this range. So the purple line here, and we're getting volume to lift it up. So if you were a betting man, if you want to bet, or betting woman, and you want to bet for Friday, so Thursday close into Friday morning, if you want to bet that it returns and goes back up to the top of this range, yeah, that'll be a good time to buy. No guarantees though. I can't guarantee anything. Just that we are still in this range and we won't have a decision whether we go up or down right here. We won't go up or down until, let's look at the SMH ETF. Yeah, we are stuck here in this area below this big red bar. Yeah, I mean, if you're betting long, this would be a good time to enter before Friday, I would think. Yeah, why not? Why not? So again, we're talking about gold, palladium, platinum. Was that what he was talking about? Yeah, so I have this gold video to show you, but I would caution you, anytime the news starts talking about gold, you should have been gold way earlier, like here. At least in June, during the summer. April to June, yeah. But the best time was around... What was the last time that was good to get in? I guess September 2022. Yeah, that was probably... But yeah, Yeah, my mom already got in like way early, like right here when it was 1,300, 1,400 during the time before COVID. Yeah. So you would have added more in 1600s. And she was already selling. She started selling this summer. All the junk jewelry she had, anything that she wanted to get rid of physically just to get cash. Because then you take that cash and put it back into the markets. So put it back in the bank, and we can look at palladium and platinum. I think this is where we will try to go into the holdings for materials. And there's a lot of commodities where I showed you cement. So yes, you have to look at everything as a whole picture. So gold might be going up, but something else might be around the corner. So you got gold here, but you could buy Palladium Platinum Trust, SPPP, since August, and it was up 30%, now just up 23%. So SPPP, Sprott Physical Platinum and Palladium Trust. So I think it's making a nice base. I was expecting it to go up in December, not do this early move up in October. Okay, guys? So we have some time. I think this will pull back again, maybe around $10, and you can buy the miner for palladium and platinum, PLG. So it is down 7% today, going back to this support level here. So I'm going to be watching earnings for PLG, Platinum Group Materials, Wednesday, November 20th, before Thanksgiving. This might be a good thing to buy from Thanksgiving into Christmas. So keep that on your watch list, okay? So let's go to the video on gold. Let's see here.
For us to be having this conversation.
It's a wonderful time to be representing gold.
Yeah, I was about to say, you must be busy.
Oh, you're not kidding. That's why I'm here instead of being home in New York.
So what's going on?
I think three things really have been the major drivers so far. The first is very strong central bank buying, mostly from emerging market central banks, which have realized over the years that they are overweight dollar-denominated debt in their official reserves and underweight gold, which is one of the most popular things for their populations, with less than 5% of their reserves in gold. So for 14 straight years now, emerging market central banks have been net buyers of gold for their reserves. That's not going to go away anytime soon because they are still underweight in gold. The second thing, we've seen over the whole of this year a big revival in Chinese investment. And I think that's because the Chinese investor is conscious of all the problems in the real estate sector and is running scared of his local stock market. So the Chinese investor in droves has turned back to the traditional alternative, which for thousands of years has been gold. And then we've also seen, for different reasons, a big revival in Western world investment as well, in North America and Western Europe, because they're worried macroeconomically.
Yeah.
They're delighted that the Fed has decided to cut rates, and therefore the dollar is going to soften. Gold tends to go up when the dollar softens. They're also very worried on the geopolitical front.
Yeah.
So all of those things together, I think, have driven gold prices to this great succession of all-time highs we've seen.
So the dollar has been strengthening, though, and gold still rallies to record highs. Real rates are also higher. I mean, do I just ignore all that? That doesn't matter?
All sorts of weird things have been happening. You've seen the S&P 500 set a succession of all-time highs, which is a risk-on asset. You've seen Bitcoin setting a succession of all-time highs, the ultra risk-on asset, and gold, the absolute ultra risk-off asset. And that's a weird kind of situation. I think investors in gold have been turning to gold because they see this tremendous appetite for risk across the markets, whether it's equity buyers or crypto buyers. And the thought is, well, if everybody is so gung-ho about risk, maybe I should perhaps up my exposure to the risk-off asset, because eventually they will turn to that. And I think that's really why we've seen all three of those things go up so dramatically.
I mean, you've covered gold for many years. Is gold a risk on asset or is it a risk-off asset?
Gold is the ultimate risk-off asset. Gold basically offers you protection against a whole succession of risk. It doesn't have any strong relationship to anything else you'd find in a typical portfolio, so it's spreading your risk. It also is a good protector against sustained high inflation. It's a good protector against potential weakness in the equity markets. That's been demonstrated time and time again. And it also offers you some protection against potential weakness in currency, whether your currency is the Hong Kong dollar or the Chinese renminbi or the US dollar.
With this recent revival in prices, do you see a lot of the physical market and the supply there a lot more coming online because of what's taking place? How does this affect how companies think, gold mining companies think about their plans?
Typically when we see very, very high prices, especially high prices at a sustained level, which we've seen now for a year or so,
right.
The gold mining companies tend to cut back on their supply because what they try to do is to mine to the average grade of ore in their mine, and the more the price goes up, then the more ore can be turned into gold. It becomes that way. So that supply often goes down. Mine production often goes down as the price goes up. Now, we haven't really seen that yet. Gold mine production has continued to go, but that's mainly because gold mining companies are very, very inflexible. They set out a mine plan which might look to 30 or 40 or 50 years ahead, and they more or less have to stick to that. They don't have the flexibility to change course.
I think we want some numbers now and targets. We've already gained, a third this year in terms of gold prices? How much more upside are we talking about now?
I am not as optimistic as certain people on Wall Street are. I mean, a lot of people on Wall Street have been talking $3,000 gold before the end of the year. I'm not going to predict that. I think we will probably see the $3,000 target at some point, but my guess at this point is it probably won't be until next year. But I think that we can see further upside from here, close to 2,800.
All right. Yeah, I agree with that. I think we are going sideways from here into February. Probably will be the next move up. So if you're not around there, you still got time. So let's look at the markets right now. Everything is dropping into the close. Very good. So we will have Microsoft and Meta, aka Facebook, Instagram, report today after the close, and that will be the linchpin for Thursday to Friday. Yeah, right there. And you see yesterday it tries to make a new high but fails to. So close. Back to July 10th. See? So close, and it falls back. We need more proof that it can do it. You need more earnings. We just don't have it yet. And we have the jobs report on Thursday. Tomorrow morning we'll have PCE, but I don't think it should be a big deal. It shouldn't be a big deal. But, if things go to crap tomorrow, I'm looking at SMCI Super Microcomputers. This is the stock to watch. It has earnings on Monday. Got audit issues today. Got dumped that news right back. We're on phase E of the Wyckoff. So, dude, if it gets to $25, I'm buying this again. I was in this stock well back when it was $10 around here before it started shooting up because of AI, blah, blah, blah. This is it. If it gets to 25, I will consider buying it. But again, it doesn't mean it will just pop back up right away. You're just buying it for a move into next year. So it might take many months before you realize any gains if it takes that much damage. That's a lot of damage. That's a ton of red candles right here. You got on a weekly chart, you got this big red candle, second big red candle, and 3 medium-sized ones all since July. So this is one of the worst stocks to be having. It used to be one of the best, and now it's the worst. So we need to see some reaccumulation back here in 25 before we believe that it can go back up to 90 to 100. All right, SMCI. So 3 more minutes into the close. Let's see here. So let's see what the S&P is doing. 579. So yeah, we still are stuck. We still are stuck at near all-time highs at 584 closing. back in mid-October, so 2 weeks ago. So yeah, we still have time to figure this out. So let's look at two interesting stocks. I was looking at it for you at the beginning of the video. WGS, I believe, is the ticker. Yeah, WGS. So let's play this video.
DX soaring more than 40% today to a 52-week high after reporting Q3 earnings, which beat expectations. The company also seeing its first profitable quarter in its history, raising full-year guidance as well. Joining me here at Post 9 is GeneDX CEO Catherine Stueland. Welcome. It's nice to meet you and have you on our show. I'm looking at an analyst report, which really says you guys knocked it out of the park. Reaches orbits, smashes numbers, achieves profitability ahead of schedule. They have a $95 price target. We saw what your stock is doing today. How'd you do this?
So I think what investors are realizing is that you can drive really good patient care and drive a really good business and be able to achieve profitability all at the same time. I think for many years, there's been this tension between can you put patient care at the same level as profitability, and we're proving day in and day out that you can.
For those who don't know anything about the business, what are your primary objectives?
Yeah, most people don't know GeneDX has actually been around for about 24 years. So we were spun out of the National Institutes of Health. And the mission really was to diagnose any genetic disease as early as possible using information that resides within each one of us, a genome sequencing product. So we go deep into the genome to be able to identify whether or not there's an underlying cause of disease. We're able to clearly and definitively put a diagnosis on that. And in the majority of the work that we do, this is for kids with rare diseases. So think about epilepsy, think about children who are having seizures, think about autism, kids who are missing milestones. So we're able to really go in and provide a definitive diagnosis within just a few weeks, and we're able to do it affordably.
Are you exclusive in pediatrics?
So today our main focus is in pediatrics, and the reason for that is 1 in 10 Americans has a rare disease. Half of them are children, and today they go through a diagnostic odyssey that is about 6 to 8 years before they get the right diagnosis, which is really unconscionable. We can provide that information within weeks, if not days. So we are trying to solve this really devastating health crisis for the children and for the families that are supporting them. There's a higher rate of depression and anxiety for the kids. There's a higher rate of depression and anxiety for the parents. So it's a devastating family health problem, and we have the technology today to be able to put an end to those diagnostic odysseys for so many.
The word on the street, I guess, for lack of a better way of saying it, is that you refocused the business, that you went from thousands and thousands of tests essentially down to less than a handful. Is that correct? And why did you make that transition?
So interestingly, GeneDX was acquired by a company called Semaphore that had gone public via a SPAC. And I became CEO of the combined entity in the spring of 2022. At that point in time, market sentiment changed dramatically from growth at all costs to profitability really is what mattered to investors. So the board gave me a very clear mandate, which was how do you make this company profitable as soon as possible? So we actually looked across the entire portfolio of tests from the parent company as well as from GeneDX, shut down all of the business lines of the parent company because they were not showing the strength. They were highly commoditized markets. And what we had in GeneDX was a very differentiated product with a market leadership position. 80% of whole exome sequencing comes through GeneDX. So we have a competitive advantage that is unparalleled, and this very wide open runway to be able to help an ever-growing number of families.
When you talk about the ever-growing runway, how big is the market?
So we think about the pediatric segment as a $3 billion market opportunity. So $2 billion in the outpatient pediatric setting. So think about a child who has unexplained symptoms, as a parent, you're taking that child to a pediatrician, you're being referred out to a specialist, and that's where we're able to intervene and provide a diagnosis. The other billion-dollar opportunity is in the NICU. So genetic testing is woefully underutilized in the NICU setting. Only about 5% of babies in the NICU have a genetic test. So we're going in with a rapid whole genome, and we're able to diagnose within 5 days and be able to move that baby out of the NICU and hopefully onto a healthier path.
All right. So that's good. We got 2 stocks then to look into this sector that's outperforming right now. So if you are very aggressive in your investment strategy, yes, so we have GDX, WGS is a ticker symbol, and you can see how it tracks alongside XBI, which is the biotech ETF. And if interest rates do not climb any further, I would say that this is doing very well. And you heard her say that the reason why it's outperforming right now is because it's showing profit. So that company has stopped trying to show growth and switched tracks to show profit because it's competing in a high interest rate regime. So this is what happens when you have high interest rates. As I've showed before, people are not willing to overpay for stocks that show no profit. If your stock shows no profit, that means the only reason people are buying that stock is because they believe there's future growth. There is high duration. So if you have something that will only make money in 30 something odd years in the future, that requires interest rates to be very low because you are accommodating loans to that company to keep on surviving until it can make a profit. So this is in a unique case where this company has switched its gears and is trying to do profitability, unlike 23andMe, was it 23andMe, right? I forgot the ticker symbol for it, but this stock is such ass. 23. I would never look at this, waste my time looking at this thing, but here, 3andMe. Yeah, okay. ME. All right, you see this? So since 2021, it's been dropping all the way down. It's from $200, $300 a share to $4, $5 a share. There you go. So this is a company that never switches gears. That's why running a company is really hard, right, guys? Okay, so the other one is HIMS. HIMS is what we're looking at. So it closed 14 down, 14.3%. We shall see if it holds this $19 area. If it does not, we're going back down to 13. So that'll be the range that we continually be at. And so we have to worry about XBI and interest rates. Okay, guys. So yeah, we got HIMS, XBI. All righty. WGS. Let me show it in the example to HIMS right now. Yeah, see, so one of the few companies in the XBI space that is going up. So it is 6 minutes after the close. I don't know if anybody reported earnings yet, so let's see. Let's look at Robinhood for this information. Microsoft, did it report yet? I see something happening. It's up 1.26%. I don't know if there was any news yet or not. And then Meta. Yeah, nothing there. I don't think anybody reported anything really. Okay. Might be a nothing burger day after the close. We really probably have to wait until Thursday after the close for something to happen. Okay, let me remove this. Let me remove that. Let's look at Reddit. So Reddit was up a 43% today. So yeah, it's really amazing. Just IPO. I'm definitely going to have to see how this works in the coming months. because that might be the indicator we need, along with GameStop. Yeah, this will have to be something we'll need to see in the coming months how this goes. Okay, let me play this Reddit video here for you guys. See what Jim Cramer has to say about Reddit. RDDT is the ticker.
That 60% of our users are not on other social media platforms. And so Reddit has a unique audience. And then we also have communities and places for people to gather around pretty much every topic imaginable, which means every company's customers are probably on Reddit somewhere. And so Reddit is a place that advertisers need to be.
Time now for a Mad Dash. That was, of course, the CEO of Reddit, a guest last night on Mad Money. This is the Mad Dash.
Yes. We talk about companies that beat and raised and companies that didn't beat and raise, or that cut. Eli Lilly cut. AMD, you could argue, this company was even stronger than Alphabet. Why? Because of that comment, 30-60. So they've become a must-buy for almost every CPG company, David, all the consumer packaged goods companies. They are there's 7 verticals that are up 50% on this thing. I think that literally there are people, David, who start their day and keep their day on this. Daily average users, 97 million. David, they made money, and not in that gap nonsense. I almost used a word that would be censored. They made it the old-fashioned way.
You know, it is a stunning move here for the stock price since the company went public, and there were certainly no shortage of questions, given it was, almost 20 years from inception to going public. They had rarely, if ever, really been profitable, and yet, boom. And it's not just because they allow the large language models to run over their data.
This is about raw user power, that there are these verticals that you can reach that nobody else has. You know, look, my daughter beat melanoma, so there's a melanoma. There's like a family of people that tell you how to deal with melanoma. Then you can go on and you can do something that Steve mentioned, which is no drink.
Right.
How to cut back on drink. These are verticals you can't reach. And I don't want to be too specific, but what I'm trying to do anecdotally is explain empirically why this thing's exploding. This was a charity. I had some meetings with Huffman before this came public, and the meetings were not fun. Because I said, blah, 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 blah. I said, make money or die, man. Well, this guy chose make money. And this is a money maker that is now going to be one of the, you're going to do ads, you're going to give it to Meta. You're going to give it to Amazon. You're going to give it to Alphabet, and you're going to give it to Reddit.
You were positive at the IPO.
Yeah, no, because I like Huffman.
You were positive at the IPO.
Yeah, no, because I like Huffman very much.
And you were right.
Oh, there you go.
Alrighty. So yeah, definitely something to watch. Because it's kind of a leading indicator now, right, of how the other ones are doing. So Meta is now down 2.38% after hours at $577 or $576 a share. So probably not good earnings, I guess, but not too bad that it's completely crashing. Microsoft only up 0.55%. So I think right now it's going to be a do nothing day. Yeah, nothing's going to be decided tomorrow morning from this. Yeah, the QQQ is just going to be stuck in a range. The NASDAQ 100 here in 495. Oh, that means Apple, Amazon, Intel, and then the jobs report will decide everything for us. Thursday after the close into Friday. Great. Real great. So, I don't know. That's it. That'll be it for before elections. So we will have nothing after that. And since we're going to talk about SMCI, I might as well play this video for you guys. This is a pretty interesting video. I thought you can see how crazy building an infrastructure for AI is. Okay, guys. Yeah, this one might pique your interest because you will have to understand the whole chain from the chip with NVIDIA to the board with SMCI to the actual data center renting, which is DLR, Digital Retail Trust. So you can buy stocks that go all over the supply value chain of an industry, and you got to know where to go. And oh yeah, we have VRT, I believe, does the water cooling, right? And then you have the utility companies and all that stuff after that. So yeah, there is all kinds of things that goes into a data center.
Is the largest AI cluster in the world. The team at X is building a massive AI supercomputer that encompasses over 100,000 GPUs, exabytes of storage, super fast networking. This place is absolutely amazing. And this entire supercomputer is built to power Grok. Now, xAI is building something with Grok that is far more than just a simple chatbot like we've seen before. And that is exactly why there is a giant cluster here. Today, we're gonna go back inside these data halls and show you a whole bunch of stuff on what makes this work, what makes this special, and just all the really cool engineering that went into this. Now, this is actually my second time at the facility, and let me just tell you, the speed at which this thing was built is absolutely amazing. This entire facility with over 100,000 GPUs was built in only 122 days. And just to give you some frame of reference, the largest exascale supercomputers only have a fraction, maybe half to a quarter as many GPUs as xAI has here, and yet those deployments generally take many years from start to finish. The engineering accomplishment here is absolutely amazing, and there's work still being done. But I thought, let's go take a look at inside one of these data halls. Let's also show some of the facilities and just kind of show you what's going on and how something like this gets built. We need to say that this video is sponsored by Supermicro, since it is, but also just want to say thank you to the X and xAI teams for giving us permission to go and film this. Also, of course, thank you to Elon and his teams for approving this and making this possible. With that, let's get inside a data hall to see how this all works.
Inside the data hall, xAI is using a pretty common design. This is a raised floor data hall, and above we have our power. Down below we have all of the pipes for the liquid cooling so that heat can be exchanged to the facility chillers. Each one of these compute halls has about 25,000 GPUs, plus all the storage, the fiber optic high-speed networking. It's all built into the hall, and then they're connected together. The connections to each data hall are basically the fiber optic cables, the liquid cooling and plumbing for the water, and then there's also just a bunch of power delivery that's super cool. Inside the compute hall, we have these clusters. Now, each of these is made up of 8 liquid-cooled racks by Supermicro. These are NVIDIA H100 racks, and inside each of these 8 racks, there are 8 NVIDIA HGX H100 platforms. We also have all of the liquid cooling for these, as well as the networking and stuff to make each one of these about a 512 NVIDIA GPU mini cluster. Now, these Supermicro NVIDIA liquid-cooled AI racks are probably the most advanced AI racks deployed at the scale. And I'm going to show you exactly why right here. So what you're going to see is that each of these racks has a total of 8 NVIDIA HGX H100 systems. So we have a total of 64 GPUs per rack. Now, in the top section, we have the Supermicro NVIDIA HGX H100. Each one of these HGX H100s has a lot of the components that are really important in these systems, like the 8 NVIDIA H100 or Hopper GPUs. Plus, there's also NVIDIA and VLink switches, and all of that is on the baseboard. Now, one of the really defining things of the Supermicro platform versus some of the others in the market is that you can actually go in and pull this top section out. You can see the little levers here. They would probably get really mad if I did this, but we have other videos where I've done that, and even on these liquid-cooled systems. And that leaves the bottom tray. The bottom tray has things like our CPUs, which are fast x86 CPUs, as well as our large PCIe switches. Just to give you some frame of reference on how advanced these are, All of that is only in 4U of rack space, and it's all serviceable just on trays. There are other options from Supermicro and others in the industry that are 6U or 8U for a similar style system, and there are options in the market that simply don't have this kind of accessibility and serviceability, which is why these things, even though they're very compact, they're also extremely advanced and easily serviceable. Now on the front of this, you're definitely going to see the fact that there are all these little tubes and they go through this little bar. This little bar is what is called a manifold, and so we have a 1U manifold for each of these systems. That 1U manifold is how we connect our liquid cooling. Now all of these little tubes are in pairs. We have both a blue and a red tube that comes out of each of these. So inside these tubes, there are 2 different liquid cooling blocks. And as you might imagine, the cooler liquid goes into the server in the blue side and then out of the server on the red side. And that is brought to the manifold that's here, and it goes back to the overall rack manifolds that are in the back of the rack. This design means that you can go and actually slide these systems out, service the HGX H100 board, service the CPU's memory and all that kind of stuff, and you just go pop these things out. Now, I'm not going to do that. This is actually training a real model right now, but it takes a matter of seconds at most. Now, there are a total of 8 of these servers in this rack, so it's a total of 64 GPUs plus 16 CPUs, a bunch of memory, and all kinds of other stuff. But on the bottom is a big part of what makes this a really scalable solution. These are Supermicro CDUs, which is a cooling distribution unit. So there are a couple super cool things about the CDU. First, you have the management unit. So each one of these CDUs has its own management, so you can monitor things like flow rate, temperature, and all these kinds of things that you need to just ensure that you're bringing the right amount of liquid through all these servers in your rack. And that, of course, ties into the central management interface, and that can be monitored, so if something goes wrong, you can see it remotely. Now, the other cool thing is that there are 2 pumps down here. Now, these pumps you can actually service because they're for redundancy.
Yeah, tropes. That's true. That's true. Let me see. Yeah, tropes. That's true. That's gonna be the future. Actually, I was gonna look for that Larry Ellison video. I mentioned this before, where he was talking all kinds of trash in the 90s about the PC. He thought the future would be where we return to the mainframe era, and we have returned. Essentially, we have returned to the mainframe era. Computers are essentially worthless without being connected to the internet, right? Like, who heard of being on a computer without being connected to the internet at this point? If you have any device that's not connected to the internet, it's good as being worthless, because most of the apps now are in the cloud. And especially with the AI models and things like that, and very little will be done locally. Most of it will be done at the cloud level. So yeah, that's why I brought this up. And so let's look at the stocks. Let's look at the stocks that we covered. So VST we covered already. VST, they do the liquid cooling equipment. So you have something on the supply chain. Vistra Corporation. You have SMCI. So that was the board, and it's down 32%. That's the board. And then you have NVIDIA, NVDA, that supplying the chip, right? And then who makes the chip? In Taiwan, TSM, right? And who supplies the electricity? Who supplies electricity? Well, it depends on your utility. So you can look at all the stocks in XLU, and who does the infrastructure for the electricity, doing the nuclear plants and all that. You can look at GEV, so the nuclear division of GE, General Electric, $150 to $300 a share right now. And you have the other ones that Blacks Who Defy mentioned. We have Lightbridge, LTBR, NNE, Nano Nuclear Energy, so that, and LEU. So these are more riskier stocks, right? Because 2 of them are micro caps. And then we have LEU, which is a small cap, I think, near micro cap. ARM is an architecture company. NVIDIA doesn't need ARM necessarily. Who uses ARM depends on who gets a license. So Qualcomm is in a trouble with ARM because ARM is trying to pull their license. So Qualcomm is a stock that will report earnings next week, Wednesday. ARM is an architecture company. Okay, so If those guys don't want to use ARM, they'll use RISC 5, RISC 5 V, Roman numeral V. So that's about it for that. Or Intel, right? They'll use x86. They'll just use Intel or AMD. That'll be alternative for CPUs. But yeah, I think some of them want to get away from that. So there's RISC 5. Oh yeah, they don't have a company. My bad. So let's look at ARM. Yeah, ARM. When does it do earnings? Earnings for ARM is Wednesday, November 6th. So around the same time. We'll see. So yeah, ARM is just an IP company, intellectual property company. They just sell the IP to other companies. There was a recent Rambus. Rambus is another IP type company. So they're kind of like patent trolls. They like to get patents and then force people to buy them. Yeah, so it had earnings. It popped 13%. So it looked like it completed a bottom here. I'm not sure if that means anything to ARM. I doubt it. So Rambus, it used to be just more for memory IP, but then they just became a patent troll and just sat on all kinds of patents that they bought. So something like that. As far as utilities, you can look at not Lean Hogs, HE, Hawaiian Electric. So I bought it below 10 right here. I think I'll wait and see. I think Citadel has a big position in it right now. Somebody released that. So that news was on Monday. I think that's why it popped a little bit. So we'll see. We'll see. Another one is PCG because that's Northern California utility. California will definitely try to consume as much electricity as possible, population growth, and you still have companies here. So they'll definitely consume electricity. They can charge whatever they want. So they're about to complete the bankruptcy, all that stuff, noise that happened in the 2018 to 2019 era. So once it breaks out here, I can easily see it go from 20 back up to $60, $70 a share. And if you're lucky, it can continue to grow from there. So yeah, if you're looking for undervalued utility stocks, that's one. And as far as water, I think CSCW or CWSC or something like that, Consolidated Water. My bad. Let me look it up. Consolidated Water, CWC. Oh, yeah. So if you think demand for water is increasing, I am watching this stock, CWCO. See what earnings gives it on Monday, November 11th. Looks like TradingView is saying that's where the earnings is. So let's see if it gets back to 20. If it got back to 20, I probably would buy it. So there you go for that. So let's see what the lithium side is doing. Lithium, yeah, hasn't been doing too good recently, huh? So it pumped up this morning for LAC and gave it all away. Okay, let me see the chart here. Yeah. We hit the bottom of this red candle, so it can't get above that. SGML is another lithium stock to watch. Still stuck there, nothing exciting. And PLL, the other one that's been moving up. PLL's doing okay. So it's trying to make a little cup here. So you got your little cup and handle motion going. Yeah, okay. So PLL might be the play to go. I mean, I think LAC finished its move. It's going to have to pull back a bit. So we'll have to see how that goes after the elections, though. A lot of that has to be after elections. I think I saw Carvana up 16% after hours. So Carvana is definitely doing well. That's one of those trash stocks that keep on doing quite well. So we'll have to keep an eye on that. Because if interest rates are going down, it's up 20%. Oh man. Dang. Why did I sell it at $17? This stock just never stops going up. It's just nonstop, man. Nonstop. So Meta is down 1.15%, so nothing bad. So if if it didn't report anything good so far, then the market's not trashing it too badly. And Microsoft 0.8%. So I don't think anything's going on with that. Carvana, though, that is something. So Carvana, CVNA. So used cars are still good on sale. Very nice. I think, yes, this stock is one of those that really do very well. Like you can see, beautiful trend. Just keeps that weekly trend going up. Yeah, you can't say nothing about it. Amazing. You can't say anything bad about it. Whatever you might say about the company, I don't know. What's the fundamentals? I don't know, but the charts don't lie. So we'll see what happens tomorrow morning when Carvana opens. I think that says something about people, the consumer anyway. Let me see what other earnings to look at. Coinbase and Robinhood and Nova. Also Etsy also reporting. Okay. Etsy. Etsy up 10%. Oh, okay. That's a pretty bad company. And it's up 10%. Oh, that says something too. So I mean, you got Reddit, you got Etsy. Oh, I like it. I think Starbucks also reports. Let's see what Starbucks got for us. People buying those expensive lattes. Down 1%, so nothing going on there much. And Hood and Coinbase. I'll look up Hood. Okay, Robinhood down 9% at 25.65 cents. So $25.65. So not good there. Let's see what Coinbase is. Coinbase down 4.85% at $201.50. Okay. So we'll see how those go in the morning tomorrow. We got Roku. Okay, Roku, ROKU down at 2%, so nothing. It's been going sideways, so Roku, nothing going on. Okay. Meta now down 0.18% at 590.49% after hours. So, okay. And now Microsoft back up 1.3% at $439.25. Okie dokie. So only Carvana. I see my favorite Carvana, even though I'm not in it anymore, still doing well. So that tells you a lot about how things are moving in the economy. So I'm bullish. I'm still bullish. Guys. Unless Jerome Powell says something crazy. I don't think whoever wins the election is going to affect anything in the near term. So I think we still have room to go up until at least mid-January. And if we're lucky, till mid-March. And then if anything bad happens, it will be sometime in March. So by that point, you should have already stocked up on more gold, silver, palladium, platinum, maybe any other materials that might be precious. Yeah, and we have China as well doing their stimulus. So maybe those Chinese stocks might do well. Because I got Jinko Solar, JKS, Jinko Solar, Chinese solar cells. Like this might be the turnaround I am looking at here. That could be it. This could be the score you need to go up. Yeah. So TAN is the ETF for solar ETF. It is terrible. So TAN, you need government funding. You need interest rates to be low. So there's a lot of things that are required to see the solar names going. And I think, let's see, what was reporting today? Nova, Nova, Nova. Yeah, let's see how that's doing. Let's see if there's anything. It's down 4%. So yeah, let's see how this goes. think Enphase reported last week. ENPH. I think First Solar reported yesterday. First Solar, so it didn't. It was down 8-9% pre-market, but made it all back. So FLSR, man, First Solar, FSLR. Okay, yeah, okay. This chart doesn't look bad compared to the other ones. Yeah, compared to the rest of the ETFs, all right, not bad. Meta, and yeah, I don't think Meta and Microsoft aren't gonna do anything. They're not really gonna do anything. They're not gonna shake the boat. Yeah. So whatever they're gonna do in the conference call, hopefully nothing happens. But yeah, none of this is gonna decide what the NASDAQ 100 is gonna do tomorrow. Then, okay, we have PCE tomorrow morning. I don't think there's anything gonna happen there too. You already have the CPI. You already have the PCI. Yeah, I doubt it. So I didn't get to cover more scanning stuff, so I'll cover it later today. And you guys remember that we have the Halloween event costume party tomorrow. Let me put up the chat for it. Right there, 9 p.m. CST, 10 p.m. EST. And we have, I think, updated. Oh, we didn't update it. So whatever. $900. I mean, I don't know if Porsche got new donations today, but hey, you guys get up to $1,500 by tomorrow. I will chip in another $500. Okay. So, and we can keep the event going longer if we have brackets or something like that. Who knows? It depends on if Porsche is up to it. But the faster you get it up to 1,500. We can make it worth your while. So hurry up. We need $1,500. That's $600 away right now. Okay, guys, you gotta do it. Because I don't know what's gonna happen. Honestly, I have no idea what's gonna happen. Gotta show up. You got Ava, you got Ruby, you got Grace, you got Lolo, you got San Jose, you got Here for the Tea, you got Beta Kitties, you got tons of others. You got 13. We got 13 apparently. At least 13 women gonna show up. So if you guys don't contribute, you're not gonna get your entertainment. You want content? You want to see John turn up? You want to see John turn up?
Hey, yo! Check it out. Here it comes.
Something ain't right, yo.
Watch out, man. Here come that fool. It's packing. Here he comes.
Yo, son, come on. Yo, Omar's coming, man. Oh, shit!
If you can't pay, you better pray. John Goat's coming.
Hey, Stu, your rent's due, motherfucker. And don't be pulling up falling down the stairs shit on me, you hear? Hey, you conscious.
Yo, I don't want to make your life no hard. I'm just doing my job. Yo. You live here, I work here. I'm doing my job.
Yeah, John's coming. What's up, Varian? What's up? So I'm done for this stream. I'll see what I can do later on today. Try to do some scanning videos to present to you guys. There's going to be some more thinking about this. So by the time we get around to November, it's going to be a very automated type of workflow where we just go scan, try to find pumpers, okay? Because I don't know, is GameStop looking like it's gonna pump? Definitely something to look at. Definitely something to look at. GME, GameStop, right? And we got some more things to cover. Oh yeah, I had some other like previous earnings to do. We got PayPal we had to look at. Like, PayPal is going down. Let's see what else. SoFi. Okay, it went down but popped back up. Not bad. What else? Pfizer. Okay, still stuck at the bottom here because it's not making money off the COVID vaccines. Let's see, Chipotle, how did that do? Oh, it's down 7.87%. Okay, definitely watching that for later next year. Snap. We covered Snap. Okay, ENVX, battery maker. Lithium ion battery maker. Yes, I am eyeing this. Looks like it's making a range. Okay, Enovix, ENVX. I'm gonna keep that on the list too. So yeah, every time you go to the quarter, look at some companies, see how they do, keep track of them. Ford also reported earnings. I don't think it did well at all either. So yeah, down 5% for the week. Okay, it's at the bottom of this range. I don't know if it's gonna collapse or anything, but yeah, keep that in mind. Keep Ford in mind. There you go. All right, 3 hours. Good. 1:40 p.m. my time, 4:40 Eastern. I'll come back in probably 4 or 5 hours, and we'll do another presentation. I'll try to cover what I didn't cover here with scanning. See how that goes. I'm gonna try to do some advanced topics. Maybe you'll understand it, maybe you won't, but I'll try. All right, guys. Later.